women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
From New York and London for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance Live on Bloomberg Television. Alongside Tom Keane and Lisa Abramowitz, I'm Jonathan Ferro. Francine Lacqua is away today. Equity futures positive 6, up 0.2%. Tom Keane, some diplomacy in Nashville, Tennessee.
Wow, was that strange, John? It looked almost British there for a moment. You know, everybody was well behaved and, you know, there were some moments all in all, but I was really quite taken with the shock. I thought the gentlelady from NBC did great, and it was, John, almost a flashback to what we remember. But, John, is that what we really want, or are we addicted to the yelling and the screaming?
I think expectations were so low going into this one, Tom, for the president. It was
Fair.
like a beaten-up stock going into earnings season. It was a low bar. But it was a change of approach from the president, and the polls and the voting will speak for itself. I wonder, Tom, whether we do get a narrowing of the gap going into the last week of campaigning.
No, 11 days away, John. You know, you're going to have the polls into the Sunday talk shows as well. What will also be interesting, and we're going to talk about this in a moment, is the stimulus idea. I know you want to get the data out of the way here.
Oh, here we
John,
go.
But is stimulus, like, still going?
Why are we doing this?
Go on, Lisa. Is stimulus still going? The never-ending talks down on Capitol Hill?
Time goes on, and the story stays exactly the same. It looks highly unlikely that any fiscal support bill will get passed before the election. This is my shock face. Honestly, what has changed, John? This is the same story over and over again, and yet day after day, markets respond, and here we are, just 11 days till the U.S. election.
Lisa, I've got to agree with you. I'll catch up with Larry Kudlow, National Economic Council Director, a little bit later this morning, Tom. When it comes to the distance between the two sides at the moment, between Speaker Pelosi and the administration, it's the same issues. State aid, school funding, liability protection for businesses, the same issues that haven't been addressed. And that's before, Tom, you even get to the subject of Leader McConnell and where some Republicans sit on all of this.
Yeah, and if we'll do that in a second here. He finally came up last night, but I thought it was good how they brought it around to the legislative branch as well. John, I want to get out front of your data check because I'm all idiosyncratic today. Turkish lira threatening 8 lira to the dollar again. I know it's an outside story, but there it is, some tension in EM.
I'll take us back to the inside story, not disregarding that one, and get you to futures just quickly. S&P 500 futures this Friday morning shaping up as follows. Lisa, don't laugh. It makes Tom feel bad.
No,
futures up 7.
He upstaged you with the Turkish lira.
1%. I know. He did a little bit. All I've got is euro dollar, 118.50, up 1/4%. Really mixed PMIs we'll touch on a little bit later this morning. And in the bond market, firm after the sell-off of the week, up about 10 basis points on the week on a 10-year, Tom, 0.8547% on a U.S. Treasury.
Yeah, it's going to be interesting to see the data there. And, of course, John, we're all completely focused on West Ham, Manchester City tomorrow. I mean, after what West Ham did to the Tots, it's going to be interesting to see how they move forward against a lockdown Manchester City. Did I do that okay, John?
You know more about this schedule than I do.
It's not a schedule, it's fixtures. John, it took me 2 years to learn to say, what is a fixture?
I'm sorry.
A fixture.
Apparently that's the lineup of games. It's a fixture.
It's a fixture.
A fixture list.
Let's look at a fixture of this debate last night. 10 years from now, they're going to be talking about the difference between debate 1 and debate 3. President Trump and Mr. Biden in Nashville. Let's listen.
Nancy Pelosi doesn't want to approve it. I do.
But you're the president.
I do, but I still have to get it.
The Republican leader in the United States Senate said he can't pass it. He will not be able to pass it. He does not have Republican votes.
Nancy Pelosi doesn't want to approve anything because she'd love to have some victories on a date called November 3rd.
This HEROES Act has been sitting there, and look at what's happening.
We make jokes about it, but seriously, that was a real civics lesson, John, last night. This is so different than the United Kingdom. The tension between the Congress, the two houses, and a president-to-be is really extraordinary. And, John, you wonder what will be the path after the election and after the inauguration.
The lame duck period, as we've talked about a million times, Tom. If they can't pass it before the election, how do they pass a fiscal deal immediately after the election, given the tension that we could see in the coming few weeks? Tom, for me, with Larry Kudlow a little bit later, I stress, I think the one question that needs to be asked, do they still believe we need a fiscal package? And if they think this recovery is on course even without one, then how do they sell that to Senate Republicans, that we have a recovery that they believe in, but hey, why not add an extra $2 trillion into the mix? Now, I'm not advocating for a specific position on this. I'm just saying that wouldn't convince me if I was a fiscal conservative.
I go back to John Edwards in that important speech. I believe it was in New Orleans years ago, speaking of two Americas. I'm sorry, John, that's what this debate is about. I just want to mention, John, the lame duck at rules in London is just really outstanding.
Okay. How much is it?
Let's move forward right now on the debate. I thought I'd get a reaction here from Mr. Farrell, but, you know, he's filling out his
I did give you one. Was my mic down?
Your mic was on. I'm muting you. Good morning on Bloomberg Radio. This is great. It worked last night. I'm muting Farrell. Joining us now, unmuted from Nashville, Tennessee, with a large black coffee in his hand is Kevin Cirilli. Kevin, what was the pundit, the spin room like? What was the spin room like last night after such civility?
Well, this was an actual debate. Look, I mean, there was substance, there was policy, and this was President Trump trying to make a closing argument, Tom, to swing state voters. I've got my eye on only the battleground swing states. When they were talking about immigration, for example, it was fascinating to see Democratic presidential nominee Joe Biden really make his case for Arizona. 11 electoral votes, a state that Trump carried over Clinton last cycle by 3.5 percentage points, and a state now that Biden is on the cusp of winning. I'm told by Republicans in the RNC, this is the state that keeps the Republicans up at night the most. Why? Because they don't really see a path to the White House if they lose Arizona. Meanwhile, you had the president talking about making a pitch to Cuban American Catholics in Florida during that immigration debate. They feel, Republicans, that Florida is within striking distance for them to once again win this cycle. I was struck by the exchange on U.S. and China relations. They talked about it not through the lens of the global economy, but through the lens of Michigan, of Wisconsin, and other heartland battleground states. But then energy policy. And this, at the end of the debate, I hope everybody caught it, because this is going to be replayed and sliced and diced virtually every single which way in a key state like Pennsylvania that, honestly, one prominent Republican pollster told me is a total disaster right now for the Trump campaign. But Joe Biden said that he is not against fracking. He then went on to say that he is against fracking on federal lands, and then he went on to say that he doesn't want to have emissions by 2025. Senator Kevin Cramer, a Republican from one of the Dakotas, he beat Senator Heidi Heitkamp, a Democrat, in 2018. He was a Republican who defeated a Democrat in 2018. Tweeted out after the debate, how does Joe Biden plan to allow fracking while eliminating oil? for a certain constituency in the Rust Belt, for a certain constituency among working class voters, that is a driving issue for battleground states that the Republicans are going to seize on this morning.
No doubt, the transition away from energy. Kevin, it wasn't answered very well whatsoever. What are the polls that you're looking for in the coming days? Where?
Well, Jonathan, I think it's going to be Wisconsin because, to be frank with you, Democrats feel that Wisconsin is going to be, and Arizona, Democrats feel that they're on the cusp of winning Wisconsin as well as Arizona, and that if they do get those states, that could be a blue wave for them. The Democrats also feel that when you've got former President Obama campaigning in Philadelphia, right a couple of miles away from Marcus Hook, which is, of course, one of the areas in Pennsylvania that Joe Biden mentioned yesterday as it relates to fracking, that they could be able to get the turnout from the African-American community, which underperformed for Hillary Clinton. They feel confident in Pennsylvania. But Arizona, Wisconsin, and then, of course, North Carolina and to some extent Florida.
Kevin, at this point in the campaign, it seems unlikely that really much of anything will make a big difference in what people will vote for in 11 days from now. What will matter is who turns out to vote. How well do the two campaigns have get out the vote campaigners on the ground in the variety of swing states that are most important here?
You know, that's a good point. I asked that question to the chairwoman of the Republican Party yesterday, Ronna Romney McDaniel. What she told me was they feel that the Republicans are motivated to get to the polls. They're differentiating in their internals from absentee voting versus early voting. The chairman of the Democratic Party, who I also spoke with, again, these are the leaders who organize the behind-the-scenes efforts and the get-out-the-vote efforts. He said that they're confident. So it's a tale of two spins right now. But I can tell you that from yesterday's debate, if you subscribe to the thought view of working class voters who turn out to vote, that was a substantial debate. And whether or not it does anything to motivate working class voters to show up to the polls on the contrast of different economic views that are candidly more traditional than we've seen in this more volatile, bombastic, rhetorical cycle with COVID, that has to have the Republicans breathing a sigh of relief this morning, and maybe even dwarfing the size of a blue wave. But we'll see, because of course, you know, maybe we'll be talking about something else 12 hours from now.
What time is it in Nashville, Kevin?
It's 1 hour later, Jim. 1 hour.
Time for pancakes.
And the Eagles won last night, and I got to see the final 2 minutes, and Boston Scott delivered for the Eagles, and we're still now we're number one in the NFC.
The level of incoherency here is tangible, isn't it?
On whose behalf? Not his.
Kevin, Pancake Pantry, get the large coffee.
Kevin Runn, great to see you, mate. Great work as always. An early morning in Nashville, Tennessee for Kevin Cirilli.
Extraordinary.
He has been.
You know,
coming up on this program a little bit later this morning, Larry Kudlow, National Economic Council Director. That'll be at 9 Eastern New York, 2 p.m. in London. From New York and London, good morning to you all. This is Bloomberg.
With the First Word News, I'm Rishika Gupta. In Europe, governments have started to impose curfews more widely to stop a resurgence of the coronavirus. Daily virus cases are hitting records across the continent. France reported more than 40,000 new cases for the first time. The parent of Mercedes-Benz has raised its full-year forecast. Daimler's earnings bounced back last quarter thanks to strong sales in China and cost cuts. The company's CFO is upbeat but cautious.
It's difficult to predict what the proceedings are going to be with regard to COVID and potentially second wave in November and in December. That's why we make the caveat. But I think what we want to emphasize is that there's a strong demand for our product substance. We have a good track record now on the operational performance, the cost discipline, and that we want to take that into the fourth quarter.
Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news analysis and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
From London and New York for our audience worldwide, good morning. This is Bloomberg Surveillance live on Bloomberg Television. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Francine Lacroix is away today. It's the price action this Friday morning, shaping up as follows. Some really mixed PMIs out of Europe. Anyone leveraged towards China on the manufacturing side doing okay. The German PMI decent on that front, Tom, but services across the continent ugly. Net Euro positive, Tom.
And to me, it's almost a weekend research thing, John. I think you're dead on this. The service goods divide and the mystery of it is a huge deal. I mean, how flat on the back are services in London?
Services across the whole of Europe right now, Tom, really, really struggling. And this is as the restrictions go on through the month of October. And that's the story in Europe, a loss of momentum coming into October.
Right.
Don't disregard that. September wasn't pretty either. And that's before cases started to pick up and before government started to respond.
And as we talked earlier about stimulus and the yes or the no of that as well. Right now, to get away from the distractions of the moment and get back to core theory, Greg Bottle joins with BNP Paribas, U.S. Head of Equity and Derivative Strategy. What's so important over Greg's right shoulder is an acclaimed Standard & Poor's OVDV function. And all you need to know, folks, that's the measurement of the volatility to come. Greg Bottle, what is the measurement of the volatility you see into 2021?
Well, the really interesting thing, I think, at the moment is the back end of this year. So there's been this kink developing in the volatility term structure, not necessarily around the US election, which is what we would typically expect, but actually just shortly after. And we think that's a reflection that the biggest fear or the biggest risk being priced in at the moment is that the election is too close to call and we get a contested election, and uncertainty is always something equity markets don't like.
Would you fade it, Greg?
I think so. I mean, clearly there's a tail risk, but I think our base case is that when you look back over the last 50 years, elections just historically do not drive equity volatility. This time it may be different, but base case has to be that I think volatility is much more likely to compress than it is spike post the event.
What's the reason, Greg, you think it might be different, though?
Well, I think we've had these mail-in ballots. It's been an unusual electoral cycle. And I think that the risk that after the election day itself, that we don't have a clear-cut winner and we could have something that drags on for days or weeks, that is something, as I just said, that equity markets really don't like uncertainty. So it's not so much that there's a result that I'm really concerned about for the market. It's much more that the process itself just drags on in the long term.
What's the argument for actually doing anything right now and not just having a long-term view and sitting on your hands and waiting for the outcome?
Well, I think having a long-term view at the moment is actually a really sensible idea. We're not sure what's going to happen regarding the lockdowns, the election, whether or not we get a fiscal package. There's a huge amount of uncertainty in the short term. But when we look at 2021, we do think we're going to get some decent economic growth. You look at the consensus forecast for earnings growth next year, and they're in the mid-20s. I think they're too high, but we could easily get mid-teens earnings growth. we're going to have rates that, even if they pick up, are incredibly low still. It's a very constructive environment for equities. So I do think it's better thinking about what are the potential long-term trades for next year rather than trying to gain some of the short-term volatility in this kind of very uncertain market.
Greg, a serious question. BTD, buy the dip. Calibrate right now the certitude of buy the dip.
Well, I think that it's a strategy that worked very well until it didn't in March this year. I think we're in an environment now where there's much less leverage in the equity market. When we look at positioning indicators in the futures, in the VIX, in the ETF flow data, we think that there's much less leverage in the market. So we do think that if we do get a retracement, it's much more likely that investors have dry powder and they are going to step in and buy the market. So we've been thinking of 32, 32.50 as a decent support level for the market. Anywhere around there, we think we'd be more constructive.
We just talked to Sonali Basak, and folks, her important special tonight on credit dysfunction within global Wall Street. And of course, she mentions there, Greg, the wall of money that's out there.
Yeah.
Are you equity bullish simply because of trillions of dollars?
I mean, ultimately what drives equity markets, we talk all day about valuations, earnings, macro data, but it is simple supply and demand. And we do think there are just potentially more buyers than sellers for equity markets. I think what this means is that it doesn't mean we can't have a retracement in equity markets, but it's much harder for the market to sustain a very volatile move lower when there are dip buyers, when there is money to be put to work.
Greg, more buyers than sellers. Come on.
Ultimately, what drives markets?
We expect so much more, Greg.
John, that's CFA level 2. Come on.
I actually buy it. I mean, not the stocks necessarily, but I'm not weighing in on that. But I mean, John, I was looking 4:30 p.m. yesterday at the Fed's balance sheet, another record high. There you go.
There we go. 4:30 Eastern.
4:30 p.m. World's coming to an end. I'm going to start writing this stuff down too.
The BNP Paribas. Thank you very much, Lisa.
Yes.
You've got to find something new to do on a Thursday afternoon at 4:30.
I think it's really important. It was a new record high, $7.2 trillion.
John.
I mean, this
John,
is the underpinning of the market.
I got to translate this. John, can I translate this? At 4:30, she's at the
Please do.
At the Monkey Bar over in the 50s. She's got Phil Silvers on the little black and white TV up in the corner. She's looking at the FT and she's reading the Fed bulletin. I mean, that's what she's doing.
Let me tell you something for free. You know more about the Monkey Bar than Lisa Bravis does, and we all know that. I'll tell you why I'm here. I'm just here to promo another one of my properties. Coming up a little bit later.
There we go.
What a lineup we've got in the 9 Eastern hour.
The open now.
Come on. Larry Kudlow, Mohammed Al-Arian, Bob Prince of Bridgewater, Hugh Hendry dropping by.
Oh, my gosh.
If anyone else wants to join, just drop me a message. We'll put it together a little bit later this morning. Good morning. This is Bloomberg.
Jacinda Ardern's Labour Party holding 64 seats in the 120-seat parliament. Now, that is interesting
because it's the first time since the introduction of proportional representation in 1996 that any party has won enough seats to govern on its own. Now, this is by turns rather luxurious and also slightly terrifying for the new Labour government because there are no checks and balances on power. There is no upper house. Jacinda Ardern can pretty much rule as she sees fit. So she did rule out, heading into this election, any capital gains tax, but as revenue collapses, it must be very tempting to give that policy another look. She's also contemplating going into coalition with the Greens Party, even though she doesn't actually need them to govern. Now, the Greens Party did take forward a more comprehensive package of tax reforms to this election. So were she to govern in concert with the Greens, they could do much of the heavy lifting on tax reform, which may also prove to be a little unpopular with some portions of the electorate. So it's going to be very interesting to watch this new term. There's going to be a lot of new and untested MPs in the caucus. So a second Jacinda Ardern term is going to be full of all sorts of different challenges to the ones that characterized the first.
When opportunity knocks at the door, don't say, blimey, I've still got my pajamas on. Say yes to stuff and it will take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with LACWA.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
From London and New York, for our audience worldwide, good morning to you all. Alongside Tom Keane and Lisa Abravitz, I'm Jonathan Ferro. Francine Lacqua is off today. Here's the Friday morning price action on equity futures first on the S&P 500, shaping up as follows. About to squeeze out a week of losses. Positive on the day, though, up 0.2% on the S&P. In the FX market, Euro firm at 118.46. But the bond market gets everybody's attention this week. The 10-year yield, 85 basis points. But it's the shape of the curve, a bit of steepness coming through. Get to the next chart. Over the last 12 months through 2020, the line in the sand for 2s, 10s, 70 basis points. And there we are right now, Tom. That's where we stalled out in early June. Will we stall out again?
Yeah, and the question is, where do you go from here back to 2017? And all I can say is the trend is your friend. And that trend, John, it is a changed story. There's no question about that. And I'll be honest, if you look back on a 5- and 10-year basis, it's a very elegant chart to a steeper spread.
At least at the front end, very much pinned, anchored, held down by the Federal Reserve. How 10s move? This is the question that I think has dominated the week. Just how self-limiting would a 10-year Treasury sell-off actually be? How much higher can yields push?
Yeah, and I will just note this. There was a 20-year auction of Treasuries this week. It went well. There still are buyers for this debt. There is this feeling that there is a cap here on yields. I will note, though, John, financials outperforming this week, very much so on the heels of this yield curve steepening.
This is why the balance sheet matters. This is why you should hang out on a Thursday at 4:30 to see what they're buying and how much they're buying. From London and New York, this is Bloomberg.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
What about fracking?
All right,
Now-
let me
now we have to ask
allow
about
Vice President Biden to respond.
I never said I oppose fracking.
You said it on tape.
I did show the tape. Put it on your website.
I'll put it on.
Put it on the website. The fact of the matter is
Showed
he's
it last-
flat lying. I do rule out banning fracking because the answer we need other industries to transition to get to ultimately a complete zero emissions by 2025.
Excuse me, he was against fracking. He said it. I will show that to you tomorrow. I am against fracking. Until he got the nomination, went to Pennsylvania.
The President of the United States with a former VP, Joe Biden, the final debate of this election race in Nashville, Tennessee, on a really important topic at a moment which many people think the former VP slipped. We'll talk about that in a moment. From London and New York, good morning to you all. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Francine Lacqua is away today. About 3 hours away from the opening bell in New York City. Futures shaping up as follows on the S&P 500. Muted debate, muted price action on the S&P +5, up a little more than 0.1%. Outside of that, in the bond market, a lot of attention this week. A sell-off. Treasuries lower, yields higher to 85 basis points on the week, on the session unchanged. In foreign exchange, euro-dollar, 118 at about 40. Really resilient euro. And softer dollar has to be the theme that's got a lot of people talking, Tom. A softer dollar, even though the recovery better in the United States relative to the stumble in Europe.
Well, something to talk about all next week. I do agree, John. The resiliency of euro here, 118.44, really is of note today. The yen under 105, also there on the weak dollar trend, 104.68 as well. Right now to the politics, and I really, really, really want to look forward 1 day, 2 days, and through to 11 days forward. And you can do that by looking at Arizona. Arizona's a lot of desert, some exploding urban areas in size and fascinating demographics. And the expert is Rick Davis. He's Bloomberg contributor. His support of the senator, always the senator from Arizona, Mr. McCain, as well. Rick, to our global audience now, I want you to explain why a Republican Arizona that back in 1952, I believe, has only elected one president of the Democratic persuasion, why it's so fascinating right now.
Well, as you point out, Arizona is one of the fastest growing states in the country. They have one of the largest, if not the largest, counties, Maricopa County, which is the heart of Phoenix metropolitan area. And that has brought a new dimension to politics. As you point out, only Bill Clinton has broken the charm of Republican victories in presidential elections in Arizona. And a lot of people think this could be the year that happens over again. There's a lot of storm happening demographically, rising Hispanic population becoming almost 25-30% of the vote. A metropolitan area, Maricopa County, that's getting a lot of influx of people from California, creating a little bit more liberalism. An elderly population dramatically affected by COVID, who are unhappy with the president's performance on that. All this has become a cauldron of...
What portion, Rick Davis, of the Hispanic vote will vote for Mr. Trump? I mean, this from Florida to Arizona, indeed to California, is an item. What have you learned about the Hispanic vote and their ability to go conservative?
Well, when we were running John McCain's campaigns in the state of Arizona, he would consistently get beyond 50% of the Hispanic vote. So there is a rationale that if you're a Republican and you support immigration reform and you're looking for ways of creating a dialogue with the Hispanic community, you can do incredibly well. When he was on the ballot in 2016, he got over 50% of the Hispanic vote. Trump, however, at that time, barely cracked into the 30s. I would say in order to keep Arizona alive for President Trump's ambitions to win that state, he's going to have to get in the low 30 percentile of the Hispanic vote. Now, that doesn't seem like much, but right now I'd say that's a challenge for him.
Rick, let's talk about other key demographics, seniors and suburban females as well. Did the president get it done, that change of approach? Do you think he tapped into something last night?
There's no question.
Okay, guys, I'm placing the order to stop on profit for euro. As you can see, we sold short about half an hour ago, yep, at 118.53. So I'm placing stop on profit for at the price 118.51. So as you understand, as soon as it will reach this price, we will sell, we'll execute, the order will be executed, and we'll get profit. Okay? Let's see what's going to happen next. Otherwise, I'll hold until the end. As you can see, I still have short as well position. We opened about a week ago, I think, as far as I remember, at 117.73. Yep. So we will see in a way 118.53. This is looks like hedged position against 117.73. So as soon, maybe if it will go really down, I will basically sell both positions at profit. Let's see what's going to happen.
3 years later, 4 years later, was the discussion about oil as being, we've got to preserve oil from the Trump point of view. And probably the biggest contrast painted last night was then Vice President Biden's response, which was to basically intimate that he was ready for a post-oil economy. And I think that's put a lot of people scratching their heads this morning saying, did we really want to be debating oil at the very end of this campaign?
Rick, how do they spin that in the next couple of days?
Well, it didn't take them 2 minutes to walk out of that auditorium and have the Biden campaign saying, no, no, no. What he's talking about is a long-term transition away from oil. That's something that people have been talking about for a long time. And what it really is a replacement from renewables. That being said, a couple of Democratic representatives have already in the Southwest started distancing themselves from Joe Biden on the issue of oil. It's a home state issue. If you're from Pennsylvania, if you're from Texas, if you're from New Mexico, you've got an oil economy that's very important to you, and now would not be the time, the last 10 days of an election, to put that on the chopping block.
Rick, great to catch up as always. Rick Davis, Bloomberg contributor and former McCain campaign manager. Tom, in many ways inevitable, pulled to the left to win the Democratic nomination. Yep. And then this kind of thing comes up in the final week of campaigning.
Well, it comes up. It could have been anything else as well. And, you know, as you say correctly, John, they'll spin it forward. I would suggest this is where all that money comes in, and that you just move forward with 11 days to go with huge ad spending, frankly, by both candidates and a lot of the heated up Senate candidates as well. And the TV ads can almost drown out that tangible issue of oil.
One candidate has a lot more money than the other candidate, going off the recent numbers. Coming up next on this program, Dr. Andrew Peskos, Johns Hopkins University Bloomberg School of Public Health professor and virologist. That's coming up next on Bloomberg. From London and New York this morning, good morning. Heard on Bloomberg Radio, seen on Bloomberg TV. This is Bloomberg Surveillance.
With the First Word News, I'm Ritika Gupta. For the first time, the FDA has given formal approval to a drug for fighting the coronavirus. Gilead's antiviral therapy remdesivir had already been prescribed under emergency use authorization. It was given to President Trump when he was diagnosed with the virus. Chicago is hoping a business curfew will help stop the rapid rise in coronavirus cases and hospitalizations. It starts today and will last at least 2 weeks. A curfew will be in place from 10 p.m. to 6 a.m. for all non-essential businesses. Bars without a license to sell food will no longer be able to serve customers indoors. Over the last week, the number of cases in Chicago have risen 54%. And California is bracing for the strongest winds of the 2020 fire season. A storm coming in from the Pacific could push winds over the Sierra Nevada, and gusts could reach up to 70 miles an hour. Fires in California have already burned a record 4.1 million acres this year. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
This has so entangled itself into our social fabric and into our social status pipelines and into the development of children that even if you opt out, that's not enough.
We're learning to live with it. We have no choice. We can't lock ourselves up in a basement like Joe does.
He says that we're learning to live with it. People are learning to die with it.
You also said a vaccine will be coming within weeks.
Yes.
Is that a guarantee?
No, it's not a guarantee, but it will be by the end of the year.
Anyone who's responsible for not taking control, in fact, not saying I take no responsibility initially. Anyone who's responsible for that many deaths should not remain as President of the United States of America.
If you go and look at what's happened to New York, it's a ghost town. It's a ghost town. And when you talk about plexiglass, these are restaurants that are dying.
We ought to be able to walk and chew gum at the same time. We ought to be able to safely open, but would they need resources to open?
From London and New York, this is Bloomberg Surveillance. That was the President of the United States in a debate with the former Vice President Joe Biden last night. And in many ways, Tom, two very different views of COVID-19. The President trying to offer hope, misplaced or otherwise, around a vaccine, and a much clear-cut, maybe more realistic view of what's happening on the ground from Vice President Joe Biden.
Early in the debate, John, I'm so happy they started with this off the foreign policy mandate and all that. They started with the pandemic. But I'll tell you, folks, what you witnessed there last night was some tangible history going back to the cholera debate of successful water in Philadelphia and terrible water in New York City 200 years ago, and then you move forward through all the illnesses of the nation. John, that was really, really something last night. Let's do this. Let's get right to it on the pandemic on a Friday with everybody bouncing off the walls. I don't say that lightly, folks. It's been an exhausting week for all worldwide in the pandemic. John, way out front on the lockdowns of Europe and, of course, well, what we see in Great Britain. Andrew Pekos is living this in real time. He's with the Johns Hopkins University Bloomberg School of Public Health. Of course, Mr. Bloomberg, part of Bloomberg LP, this television and radio property as well. Andrew, we have come so far since October, and yet what I witnessed last night, literally back to the know-nothings of 1840, was science versus non-science. Is that too narrow of a distinction?
The polarization in terms of the public health recommendations to control this pandemic are really, it's sometimes unbelievable to me coming at it as a person who's really looking at the facts and can see examples around the world of how science, good approaches, and conviction to stick with those approaches can actually reduce the level of virus spread in a community, but also allow us to restore some of our regular aspects of our lives in terms of opening up businesses, opening up workplaces, and being able to do that in a safe way. A safe return to our regular lives is possible, and there are ways that we can do it.
Andrew, is there one way of doing this, or do different places need different approaches? We often talk about one single good approach, but New York seems to be taking a different approach to, say, London compared to, say, Berlin. Why do we have these differences between developed economies and developed governments and their approach to the same virus?
Yeah, so there needs to be, starting from the top, there needs to be a political will, there needs to be resources put into place so that the public health interventions that we know can stop virus spread can be effectively put into place. The problem with the virus is that its outbreaks are very, what I call, heterogeneous. So some cities right now are undergoing massive increases in terms of their cases. Others, my city, Baltimore, here is one example, are not in the same situation. And so what you want to do is apply the more stricter public health interventions in places where they're needed and not apply them in places where they're not needed, because that puts an undue stress on the community that isn't necessary at the times. So I think that's part of the reason why you're seeing different approaches occurring in different places. It's also the politicalization of this, and that's why you're seeing some of the approaches that should be put in place in states that are increasing cases not being put in place. And so that's the problem there. It's a leadership problem and an ineffective administration of these public health interventions when needed.
Meanwhile, we're all holding our breath and waiting for the vaccine to come out, and there are a number of trials that are getting close. What kind of vaccine are we looking at, though? How important is it to focus on the efficacy, whether there needs to be a booster shot, how long this potentially immunizes people? What's sort of the outlook there on the leading vaccines?
It's such a great question. So, all the vaccine candidates that are in place right now are really going to require 2 administrations, an initial shot and then a booster some weeks later. And what we really don't know yet, well, let's start with what we know. We know that most of the candidates coming through can induce a rather good immune response in most of the participants. That's based on smaller studies, phase 1 and phase 2 clinical trials. What we don't know is how that's going to protect us from the COVID-19 as a disease. Is it going to stop people from getting infected 100%? Is it going to stop people from being infected by 50%, but reduce disease severity by a larger percent? And those particular factors are going to really dictate how effectively this vaccine can be used. It's not very likely that this is going to be a 100% efficacious vaccine that prevents you from ever getting infected. The more realistic expectations are that it's going to help us protect a certain percentage of the population, reduce severity, and then it needs to be rolled out in a way that can reduce the total number of cases. And that's going to be the critical thing, how the rollout is going to be based on how efficacious the vaccine is.
This is a really important point for markets, too. I know you're focused on the medical aspect, but Goldman Sachs put out a report on how vaccine volatility was heating up heading into what we're going to be hearing from the likes of Moderna Moderna and Pfizer are about to release the results of some of their phase 3 trials. When are we going to know what we're dealing with when it comes to the vaccine, how protective it is, and whether or not it can actually break the cycle of the pandemic we're seeing now?
Yeah, so some of the vaccines that have entered their phase 3 clinical trials already are just wrapping up their enrollments, meaning that they're hitting their 30,000, 40,000, 60,000 people targets. Now, that means that those people, we won't see results from those studies until 2 months down the line. But the companies will probably be releasing data on the first individuals that were vaccinated. And they'll probably be positioning to get emergency use approval from the Federal Drug Administration if they can continue to show that their vaccines are safe and they have some signal for efficacy. So we'll see some preliminary data probably in the next month or two, but the full data from the studies won't be released until probably sometime in the early year, because they only finished up enrolling their patients in the past week or two.
Andrew, as you're aware, and just quickly if you can, there are many people worried about taking this vaccine. I don't expect you to talk for the pharmaceutical companies, but from where you're sitting, looking at the process, what are your thoughts on the process and how quickly this is happening?
So the process has been sped up in places where it can be sped up, in terms of production, in terms of approval, in terms of providing money for companies to make large numbers of doses before their clinical trials are done. So those are all good things that have sped up the production and the capacity for us to initiate a vaccination campaign. We're now in a stage where we're looking at safety and efficacy at a larger scale, and those are the studies that can't be sped up. We have to wait a certain amount of time after a person gets a vaccine and after their booster, so that we can show true safety signatures for these vaccines. And then we also want to have some idea of the issue of efficacy that I just talked about. How good is this vaccine? How is it protecting? What is it protecting from? Those are the things that have to take time, and we're in the middle of doing that right now.
Really important distinctions. Andrew, appreciate your time this morning. Thank you, sir. Andrew Pekos there of Johns Hopkins. Coming up later on The Open, just throwing another one in there, Bob Prince, Bridgewater Associates co-CIO. What a lineup at 9 Eastern. That's 2 in London. Tom Keene's not with us now because he's a little bit upset about what's going to be on Bloomberg TV a little bit later. This is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
This is Bloomberg Surveillance. I'm Rishika Gupta with your Bloomberg Business Flash. Shares of Intel are falling. There's new concern that the company is losing its lead in computer chips. Intel reported a surprise drop in data center sales. Plus, it says that sales to cloud computing providers will slow down in the current quarter. Another strong quarter for the traders at Barclays. The bank's securities division reported a 23% jump in currency rates and credit trading income in the third quarter. That helped Barclays beat earnings estimates. The bank also took a smaller impairment charge than expected. And L'Oreal reported a surprise increase in sales. The French company was helped by pent-up consumer demand for skin creams and cosmetics after months of lockdowns. We spoke with L'Oreal's CEO.
We are trying to navigate through this crisis, and we are still confident that we should be able to deliver a positive second half this year. And we are preparing also for a positive and dynamic next year.
That is your latest Bloomberg Business Flash. John?
Ritzka, thank you. Let's get to the price action this Friday morning. Just quickly, shaping up as follows on the S&P 500. Futures look a little something like this. Up 10 now, a lift, up a third of 1%. I just sense the fatigue around the same old never-ending stories. The campaigning, Brexit, fiscal talks. Lisa feels it too. Yields 86 basis points on a 10-year. At least you've got a move in the bond market, Lisa. Is it a squeeze? Is it something durable? Is it off the back of some fundamentals?
Yeah, honestly, very unclear. I will say coming into this week, there was one of the biggest short positions on treasuries in a long time. So arguably, this could be a positioning thing because what has changed, John? Anything?
Talks are advancing, Lisa. Speaker Pelosi told you so. Differences are narrowing.
About talks.
You don't believe her?
About talks. Well, I mean, it's all about
talks
timing.
Are progressing.
But it's all about timing, right? People were wondering, they don't expect it before the election now. So the issue is just about the polling. I don't know. I don't see anything really changing.
I've got to be honest with you, Lisa. I don't think it's just about timing anymore. I think it's about size. And the size of that package depends on the outcome of this election. It could be the difference between $2 trillion and $500 billion. Depending on what the complexion of Congress looks like, you could have a huge band, a huge difference, a range of outcomes, anywhere from $2 trillion packages all the way down to what Leader McConnell is pushing, $500-600 billion. Alongside Lisa Abramowitz, I'm Jonathan Ferro. Tom Keencam, loads of positive feedback about it in yesterday's program.
Just keep going. Wow.
Just beautiful.
For those on
radio.
way
out, I'm just going to leave it there. Futures up 10. Just get Tom back up. Come on, put the shot back up.
Really
Futures up
scintillating.
10. This is Bloomberg.
Ada 3 kelompok pengungsi tersebut yang sudah berpencar arah. Kemudian kami dari Polsek Banda Sakti berkoordinasi dengan perangkat desa Kampung Jomblang melakukan upaya pengumpulan secara persuasif serta minta tolong kepada warga. Alhamdulillah warga yang terpecah semuanya berkumpul.
you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
Even in a pandemic, big companies have maintained easy access to financing, but small businesses and consumers are finding it much harder.
There's certainly a large part of the economy that's not being seen by the banking system.
I'm Shanali Basak. Join me for a Bloomberg special report, The Credit Disconnect, this weekend on Bloomberg Television.
Those at the bottom are having a very hard time.
We are having this income cliff at a time when actually the consumer is supposed to go out and spend.
The market is not as well prepared as it normally is for these kind of downside events.
This is a market that's thinking at some point stimulus is going to happen.
The Fed has a lot of upside to accelerate, but I think they're going to maintain this pace.
We need support for the economy, both for monetary and fiscal policy.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
From London and New York for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on Bloomberg TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. The focus of global markets on America's capital, Tom Keene, Washington, D.C. The last debate is behind us, a change of approach from the president. Will it resonate in the final week of campaigning?
Well, I got to see, the zeitgeist this morning is clearly that, as you say, John, it was a more civil debate. As you say, it's a debate where Mr. Trump clearly got much higher marks on first blush than he saw in the first debate. But with 11 days to go, I'm sorry, John, I'm going to say not what I think or maybe what we all think, but what we hear from every single pro. The money matters, and the gentleman from Delaware has the money.
Do the polls matter, Tom? Are you starting to believe the polls a little bit more, or are we still questioning them?
My summary is it's tightening up. I think I saw a number of reports this morning that clearly Mr. Biden's ahead in this poll, that poll, national poll, state poll, but the president is tightening it up, as was widely predicted.
11 days to go. Lisa Abramowitz, 11 days to go before we can get a deal on Capitol Hill, on fiscal stimulus between House Democrats, the administration.
We're not getting a deal. And basically, people are not expecting that. I do want to just say on polling, if the polls have it wrong, political polling, the entire industry is dead. I'm very curious to hear what Larry Kudlow has to say, though, on the stimulus point. He's joining some Bloomberg television show at 9 a.m. He is the U.S. National Economics Council director. He talks with some guy who hosts the show at that point. We will be listening in carefully.
The fourth time we've promoted this today.
He's a really nice guy. I've heard the guy doing the interview. He's a really nice guy.
Oh, yeah? You like him?
I can tell you there's another interview after that. I'll catch up with Bridgewater after that.
Keep
Mohamed El-Arian after
Keep
that.
going. All
and
right.
Henry after
Let's
that.
get to the data. You can promote it later. You're right. You've got a fantastic lineup. You should stick with it. 9:45 a.m. Maybe they'll also touch on this economic data. U.S. October PMI is coming out. Should be interesting following what we saw in Europe. This divergence that Tom was talking about between services and manufacturing, ongoing. Services feeling the brunt of the ongoing rolling coronavirus crisis and people not going out to eat, et cetera. And at 1 p.m., normally this wouldn't really matter, but Baker Hughes U.S. rig count, I am watching it, especially on the heels of the debate last night where oil became such a major issue. How much pain is there in this industry where oil production in the U.S. has contracted by a quarter since the beginning of this year, John? Go ahead, Tom.
John, this is really important, I think, and I can't believe I'm doing this, folks. Bob Prince is a really important interview today because the theme of the week, folks, is the mystery about negative interest rates. And John, at the zero bound means so much for everyone.
The inability to stimulate the economy and what will trend growth look like. Big topic of debate with myself and Bridgewater a little bit later after the huge dispersion of performance and divergence we've seen, Tom. Will it persist or will we see a period of convergence? And I can tell you that Bob's view is increasingly much more divergence for the year to come, perhaps, Tom. And that's where the conversation will be. That and a huge cash cushion that some people are still carrying. Tom, I think a big question is, where does that cash go?
Absolutely. It's been a theme all morning here, the liquidity issue. And, you know, Chanelle's Basic's special tonight on credit, John, is the same thing. There's a wall of money out there for the haves, and they got to put it to work.
Thanks for the promo, Tom. Here's the price section this Friday morning.
I just,
We'll get another 2 in. Equity markets look like this this Friday. Equity futures, a +6. We haven't done that yet. We'll do that a little bit later.
I noticed.
0.2%. In the bond market, 86 basis points on a 10-year. Euro dollar 118.43. Stronger euro, weaker dollar. Really muted price action following a more civil debate in Nashville, Tennessee.
Success is going to bring us together. We are on the road to success, but I'm cutting taxes, and he wants to raise everybody's taxes, and he wants to put new regulations on everything. He will kill it. If he gets in, you will have a depression, the likes of which you've never seen.
I represent all of you, whether you voted for me or against me, and I'm going to make sure that you're represented. I'm going to give you hope. We're going to move. We're going to choose science over fiction. We're going to choose hope over fear. We're going to choose to move forward because we have enormous opportunities to make things better.
That was the last word on the big stage, the final debate between Vice President Joe Biden and the President of the United States, Donald Trump. Steve Cheverone joins us now, Federated Hermes Portfolio Manager. Steve, great to catch up with you, sir. A simple one. How are you navigating the next couple of weeks?
I'm focused on January 22nd, because on January 22nd, I'm going to have a president. I don't know who, but I'll have one, which means the political uncertainty in front of me will be less than that's behind me. I think the virus will be incrementally less deadly with further development of treatment and vaccine. I think I'm going to have a Fed that's still not thinking about raising rates. Stimulus that is either in place or on its way, and really positive earnings comps ahead of me in the second quarter. I want to own that in size, and if the market's going to give me cheaper prices to add to those cyclical parts of the market between now and then I'll be happy to take that opportunity.
Steve, you've been dead on this on asset allocation as well. Do you play the large cap U.S. game, or is it truly time to rotate to small, rotate to international, indeed sell the apple and buy the caterpillar?
Yeah, it's small in value for us. I want to include international there as well, although they can't shut themselves down. But when you think about it, the incremental news flow on big growth in tech is just going to be a little less good. I bought everything from Amazon in April. I bought a lot from Amazon this week, just not everything. On the flip side, I think you've got stimulus coming, not this week, but it's going to come over the next couple of months. The vaccine's positive for cyclicals, and tax changes. If we do get a Democratic sweep, both the corporate tax change and the capital gains tax change could put a hit on tech and therefore benefit cyclicals on a basis. So that's the play for us.
Steve, can big tech continue to rally if interest rates rise?
Yeah, look, I don't think I think it can work in an absolute sense. I don't think it outperforms in an absolute sense. I mean, if interest rates are rising because the economy continues to recover, and let's make no mistake about it, we've added more jobs back to the economy in the last 5 months than any 5-month stretch in history, times 4, right? We've got retail sales back above where they were before the crisis. Housing, the best since 2006. If that's why rates are rising, all risk assets can do well. We just think that the cyclicals will do better because they're going to be more directly tied to that growth.
Do you put the financials in that bucket, Steve?
You know, that financials and energy might be the two contrarian plays on a Democratic sweep. If I've got a Fed that's intent on keeping rates at 0, and I end up getting a fiscal package that's, $2-3 trillion, growth and inflation expectations may move high, the short end may be anchored, and you could get a steeper yield curve. It could be the real contrarian call. Same thing with energy. If you're going to really impact supply, well, I don't want to be an E&P player that doesn't have a great balance sheet, but gosh, if I'm Exxon, I may get down to that 5% dividend yield because I doubled, not because I cut the yield. If you're sitting on that resource and prices are forced meaningfully higher. So I think those could be two contrarian calls if we do get a D sweep. We would argue at Federated, however, that we think this is still a very competitive election and a very uncertain outcome over the next 12 days. or 11 days now.
So you've not taken any fresh positions in the financials or in energy over the last couple of months?
Well, no, what we did do in August, because we believe in this theme of the economic recovery and how that will benefit cyclicals, is we neutralized our overweights to tech and growth. We went overweight value cyclicals, small caps, dividend payers, and we closed our underweights in international. Frankly, I'd like to be more in that position, but given the uncertainty over the next, what could be 2 to 3 or 4 weeks, we're tilted in the right direction, but we would use weakness to get more tilted.
Steve, what is the shop doing in healthcare? I mean, we come out of this and we've got the judicial process on the Affordable Care Act, but whatever we do is you stagger to January 22nd, and for that matter, July 22nd, you've got to make a play on healthcare. How do you calibrate that? How do you calculate that?
Yeah, I mean, look, I think, right, there's really two outcomes to this election. We can try to pretend there's a lot, but there's two. There's a Democratic sweep, which is a change in policy, and then there's different configurations of divided government, which are essentially what we have in place right now. The concern, therefore, would be, is there a change if you get a change in government? Healthcare, pharma, and biotech got a really sweetheart deal in the original ACA. So if the Biden plan is for, ACA plus, we don't think there's a lot of reasons to be concerned there. There's lip service around pricing on both sides. But we think that the story in healthcare is you're going to have a stockpiling of medical goods to avoid being caught short like we were this time, continued development of some interesting therapeutics. At worst, it's a neutral for us. At worst.
Steve, great to catch up. Always good to hear from you, sir. Good luck ahead of the election. Steve Cheveron there, Federated Investors. I do wonder, Tom, whether we overplay the importance of the politics sometimes, particularly this time. If you take one stock, let's pick a name, Tesla. Let's think about how well Tesla has done over the last 4 years through an administration that is very pro-fossil fuels, oil and energy. A stock that's done terrifically well, Tom Keene. And that's what a guest said on this program. Maybe don't overthink the politics sometimes. Good companies, if they're doing good things, they'll do well.
I grew up in a house, John, that was linked at the hip on politics and investment in the stock market and all that. And what I learned growing up in that house is I don't believe in it. And I think you're 100% right. Yeah, the politics is important. It's certainly something we need to cover and all the attributes in. But at the same time, it is about the companies and their company stories. And it's always underestimated, John, how corporate officers react to what they're handed.
From a market's perspective, Lisa, the last 4 years, and I stress from a market's perspective, they come down, they're reduced to two things. Tax cuts, one, that was first, and then two, the trade war. They are the two dominant forces from this administration over the last 4 years, and we're thinking about all kinds of things over the next 2 weeks.
I think arguably the biggest issue that people perhaps are not considering is split Congress, right? I mean, this could actually have an impact on markets because it impacts the fiscal support that we could get next year. And that is a game changer for markets. And that, I think, is where people are focused, John.
Lisa, I would agree. Overwhelmingly, the consensus assumption is we get some kind of fiscal package. A big question would be, what happens if the fiscal standoff persists well into 2021? From London and New York this morning, good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. This is Bloomberg.
With the First Word News, I'm Rishika Gupta. President Trump and Joe Biden covered a wide range of issues in last night's second debate, amongst them racism, corruption, and the manner in which the president handled the coronavirus.
We're learning to live with it. We have no choice. We can't lock ourselves up in a basement like Joe does.
He says that we're learning to live with it. People are learning to die with it.
You also said a vaccine will be coming within weeks.
Yes.
Is that a guarantee?
No, it's not a guarantee, but it will be by the end of the year.
Anyone who's responsible for not taking control, in fact, not saying I take no responsibility initially. Anyone who's responsible for that many deaths should not remain as President of the United States of America.
Unlike their first debate, the candidates largely complied with rules of the debate that call for them to allow each other time to speak. In Europe, governments have started to impose curfews more widely to stop a resurgence of the coronavirus. Daily virus cases are hitting records across the continent. France reported more than 40,000 new cases for the first time. The UK has signed its first major trade deal since Brexit. The agreement with Japan largely preserves the terms under which the UK traded with Tokyo as part of the European Union. Meanwhile, there are signs of progress in trade talks between the UK and the EU. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Make China do is play by the international rules, not like he has done. He has caused the deficit of China to go up, not down.
China is paying. They're paying billions and billions of dollars. I just gave $28 billion.
New sanctions?
I just gave $28 billion to our farmers.
The President of the United States alongside the former Vice President Joe Biden from London and New York this morning. Good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Here's the Friday morning price action. Equity futures look a little something like this on the S&P 500. We drift higher by 8 points, up 0.2%. In the bond market, risk aversion fading from where we were 24 hours ago. Yields getting up to around about 86 basis points on a 10-year. In foreign exchange, this complemented by some dollar weakness against a stronger euro. That's been the story through much of this week. Euro dollar 118 at around about 40, up about 0.2% on that currency pair. But a standout move of the week, Tom Keene, it's got to be treasuries lower, yields higher, approaching the levels that we hit back in that first week of June.
Yeah, yields higher as well. And you can talk at 9 o'clock on the open about this, John. I think it's really important to see 2s10s widen out and some of the other dynamics there. To me, along that line, John, the real story is the real yield. Again, another one of your properties is coming to negative 0.91. That's a huge deal to see a diminished real yield over the week.
1 p.m. Eastern time. Just throw that out there, Tom.
Thank you.
Anything
1
else?
p.m. Eastern time.
Anything else?
Good.
Who else is joining?
I'm done for now.
Okay. Can I do a shout out? Bloomberg has the single best headline of this debate last night, John Farrell, Mario Parker and his team on graft, COVID, and racism. And I really think that captures, some of the themes that they really ramped up. Into last night let's do this. Let's get to Kevin Cirilli right now, sleepless in Nashville. We're thrilled he could join us, our chief Washington correspondent. Okay, Kevin, I've heard enough about the debate. What do they do 10 days to go, 9 days to go, 8 days to go?
Well, look, this is the sprint to Election Day, and they're going to be flooding the battleground states. No doubt you're going to be seeing that. President Trump has campaign events scheduled in Florida, Pennsylvania, North Carolina, and ditto for Joe Biden. And it's going to be fascinating to watch not just where they deploy some of their top surrogates. President Obama will have a campaign event in Florida as well this weekend, but also to see where do they put their money? Where do they spend their money? And at what point is there an oversaturation rate on campaign ads in battleground states like Arizona? Okay, so you've got Wisconsin. You mentioned it earlier, Kevin Cirilli. Wisconsin is of new interest as well. You got Madison, where there's no Republicans. You got Milwaukee, which is an interesting city. Maybe Kenosha, with the tensions that were there months ago. Tell us about the rest of Wisconsin. Well, look, I think from the Wisconsin perspective, this is a state where the Republicans are hoping to cling on to it. You mentioned Kenosha County, a county that President Trump carried by just more than a couple hundred votes against Hillary Clinton, and that really could be the deciding factor in a key toss-up like Wisconsin. But even moving beyond just that particular portion of the map, Democrats are trying to put together a blue wave. They're not just playing to win the Electoral College. They're playing to have a victory in the Senate as well in order to advance many of the Biden administration's agenda coalition items as it relates to energy policy, for example, as it relates to tax policy, for example. So much at stakes for the Democrat coalition as well, even in the building behind me last night when they were debating. I think you really saw that boil over in terms of how Joe Biden would navigate the far, far left of his party, which has been increasingly more vocal, has made inroads in having his ear, and contrasting that with what you saw from President Trump, which, quite honestly, was a Joe Biden trying to peel more off from Republican voters and less about trying to soar up the far left of his party.
Well, Kevin, we've talked repeatedly about Republican senators up for re-election distancing themselves from the president. Let's talk briefly about former Vice President Joe Biden and Democrats who might have to distance themselves from the energy comments from last night. We've already heard from one Democratic congresswoman seeking re-election in Oklahoma immediately after that campaign, that debate, stepping back from the presidential candidate and his comments on energy. Do you expect to see more of that?
Yeah, absolutely. Here in Tennessee, where there's a Democrat, Christopher Hale, running in a deeply conservative district, he's running as a new type of Democrat for re-election. He's even distancing himself from those energy comments. Connor Lamb is going to have to distance himself from those comments. That raised so many questions about what the Democratic Party is going to look for in a Green New Deal, and where there's a lot of confusion, maybe by design, maybe by not design, in terms of trying to understand what a new Green Deal coalition would look for and what it would precisely mean. I mean, look, when there was a key Pennsylvania moment last night where Joe Biden referenced the Delaware Basin. That's from an era in which there were 8 or 9 refineries in that part of the state, as well as in Delaware. It's since been renamed to Delaware City. And so to take you behind the scenes here, the Biden campaign is playing to reestablish and recreate the Obama coalition, which didn't really have the energy sector in the 2012 and 2008 elections behind him. And so that's a gamble. But, you know, it right now is paying off. And so we're going to have to wait and see if that holds on Election Day. But many Democrats, from the conversations I'm having, especially in battleground states, in Rust Belt portions of this country, are really seeking clarity on what precisely it means to not ban fracking, but try to get rid of emissions by 2025.
Kevin, just real quick here, who has a better ground game to get out the vote?
Well, look, I think it's a tale of two spins, right? And when I ask top-level sources on both sides about their specific ground game efforts, they both tell me that they're winning. And so I think it's really ultimately going to come down to whether or not people show up. Republicans say that they've been factoring into, taking into account, Lisa, for voters to show up on Election Day, that they feel they are motivated to show up to the polls. Democrats say that they have been really pushing for people that didn't show up last time in African-American communities, for example, to really mobilize that vote ahead of Election Day with early voting.
One thing we do know, 40 million plus already have shown up. Kevin, great to see you. Kevin Cirilli, Bloomberg chief, Washington correspondent. Tom Keene, it's almost a cheat guide to political punditry, isn't it? It's going to be about the turnout. It's going to be about the turnout a week from now.
Exactly. And the turnout's changed. This is so important, John. You know, there's habits we're into. I'm sure it's the same, John, within the United Kingdom. There's, you know, the BBC goes up north or whatever to some place that you always know. You can set your clock to it on the night of a prime minister election. Great. Here, it's all blown up. As you mentioned, we're well out over 40 million. The Times has a great summary. John, we may be to a 50 million sum by the weekend, but this process, 11 days, 12 days, 13 days from now, it is truly all blown up.
Can I ask something, John? Tom keeps talking about how orderly the UK election process is, how orderly Parliament is.
Oh, it's fun to watch.
Is that an accurate characterization?
I don't think it is. One thing I will say is that my experience with British politicians is that they are a little bit more resilient to firm, hard questioning, that they will think you're just a little bit harsh. They won't think you're being politically
So you're going to do
biased,
this with Kudlow here in an hour? You're going to be tough on Kudlow? You're going to go British on Kudlow?
Larry is very resilient these days. He allows me to be British, and he's very resilient about it.
You've trained him.
This is Bloomberg.
opportunity knocks at the door, don't say, blimey, I've still got my pajamas on. Say yes to stuff and it will take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with Lacroix.
From London and New York for our audience worldwide, good morning, good morning. Alongside Tom Keane and Lisa Abramovich, I'm Jonathan Ferro. 7:30 Eastern, 2 hours away from the opening bell. Here's the price action for you. Let's get you up to speed on where we are cross-asset worldwide, with S&P 500 futures up around about 8 points, advancing 0.2%, down on the week by about 0.9%. Coming into Friday's session. In the FX market, euro firmer, 118.50 on euro dollar. Really mixed PMIs that we touched on a little bit earlier. We'll talk about that a little bit later. Up 0.25% on that currency pair. In the commodity market, crude firmer by 0.4%, $40 and around about 80 cents. And that's where we go next. An unexpected moment on the energy industry in Nashville, Tennessee. Take a listen.
Would you close down the oil
By the way, I
industry?
would transition from the oil industry, yes.
Oh,
I would
that's
transition.
a big statement.
It is a big statement.
That's a big
because
statement.
I would stop.
Why would you do that?
Because the oil industry pollutes significantly.
I see.
And here's the deal. But
That's
you
a
can't
big
do
statement.
that. Well, if you let me finish the statement, because it has to be replaced by renewable energy over time.
Tom Keane, it's a moment that lingers
Yes.
into the weekend and maybe into next week too.
Absolutely, and this is what we do at Bloomberg Surveillance Phones. I'm not going to mince words. If you have any interest in hydrocarbons, any interest in the future of this great debate, not out to November, not out to the inauguration, but how about 10 years? We have the correct guests for good conversation. We rip up the script with Afsani Beshlos, of course, Wall Street Week contributor and truly one of the world's experts on natural gas dynamics as well. Afsani, thank you so much for joining us. What is the political economics of the less oil these two candidates were talking about? What is your timeline?
Tom, what is really interesting is that the candidates are talking about it, but the markets are taking care of it themselves. You had the BP CEO on recently, and also the way the market is going right now and the way people are behaving. Every utility company is increasing the share of its renewable energy within its own energy use in the U.S. If you go to Texas, the largest growth sector in energy in Texas is in fact renewable energy, solar energy. You go into the Middle East, the largest investments that are going on in the Middle East, in Saudi, in UAE, in solar. So the point that is really interesting that was missed last night was the fact that people are already investing in solar, already investing in wind.
Afsana, I was in the Washington News Bureau of Bloomberg with Spencer Abraham long ago and far away, our Secretary of Energy for Bush the Younger, the day we discovered that America really doesn't have a national oil policy. Do we need one?
You know, there was a time when we needed an oil policy and energy policy when energy was such a huge part of the economy. Remember when we started, when we actually did have an energy policy at one point, or what we called energy policy, was when energy was more like 15% of the economy, maybe 10%. Today, the size of the energy sector, which is really mainly the oil and gas sector in the US, is close to 3%. And so energy, while being very important, is not where it was compared to health sector, compared to technology, compared to the other sectors that have been growing. So it's not that we don't need energy to lubricate and to use in our cars and in our manufacturing, but it is not exactly as important as it was the period that you're talking about and when I started working on energy in my career.
Well, Afsana, let's talk about where you think we're going. Right now, we're producing about 10 million barrels of oil a day in the United States. What do you think the trajectory of all of this actually is over the next 5 to 10 years?
I think, as Vice President Biden said, it is going to be a transition. It has been a very slow transition. When I started again working on this transition, it was almost like 20 years ago, natural gas was taking a little bit more share from oil, but it was pretty slow. As we've seen in the last 2 years, natural gas has taken a bigger share from coal and oil, and solar and wind are taking a bigger share from everything else. So the transition could be a while. As we see, the electric cars have been a little bit slower to come to market. Tesla obviously has been fabulous, and other cars are still having technical problems when they come in. But if you look at the economy moving forward, I would think that whether it is 10 years or 15 years or 25 years, there will be a transition, but with faster and faster growth towards renewables as the technology that is helping with batteries help us move in that direction much faster.
Asfana, has the pandemic accelerated that shift?
You know, the pandemic hasn't slowed it down, Lisa. I think what is really interesting is that oil and gas got slowed down with the pandemic, right? And generally, the economy slowed down, which meant that you were using energy less. In fact, the president last night said that we have clean air. Yeah, the reason is because our economy is not at full capacity. Of course, air gets to be cleaner if you're not driving as much and not using your factories. But renewable energy investments have been going pretty close to schedule, maybe delayed a little bit, but much faster than the oil and gas investments that were in the works before COVID.
Afsana, a lot of this begs the question, what do we need the government to do here, if, as you say, that private companies are heading in this direction anyway?
You know, what the government could do is we had a lot of support for the oil and gas industry over the last 20, 30 years. And if some of that could also move more into the renewable energy, I think it would be really, really helpful. Also, in terms of the government having clear policies on regulation and making it easier to invest in infrastructure and in energy, particularly renewable energy, could make it easier. As you know, the regulation that has been enveloped around solar energy has been very confusing. It has been on, off, on, off, on, off, and it has affected consumers. So having something that is clear and long-term would help the industry.
Let's end on infrastructure more broadly. 4 years ago, after the election, the Trump trade, the so-called Trump trade, was all about infrastructure spending. It wasn't just about tax cuts. It was all about infrastructure spending. Then, Afsana, it just did not happen. Why does it not happen in America? Why can't we make it happen?
You know, I think it's interesting because 2008, it did not happen either, right? There was a moment where we could have put some of the money that came into the economy into infrastructure. As you said, it didn't happen during the last 4 years. I'm actually more optimistic, Jonathan, about the next 4 years. I think this is a time where post-COVID, COVID has had a lot of physical and psychological impact on people, but this might be the time where, in fact, you have industry, you have the financial sector, and you have the government coming together to build infrastructure. And I think that some of the delays we could blame on all kinds of things, but the biggest problems about infrastructure in our country is the sort of federal versus state issues and some of the regulation that has delayed infrastructure. And that could be something that the Democrats come together with the Republicans and help resolve so that our roads and bridges do catch up with the Chinese. I mean, it is really interesting how in the last, especially post-COVID, how the Chinese have continued with their infrastructure, but also continued investing in their new financial structure. We're still in a financial structure which is the old mode, whereas they're bringing in digital currency, they're bringing in clean energy, they're bringing in new infrastructure, they're bringing in new health policies. So I think it is time, if we want to be number one, to bring all of those things together and to the forefront.
It's interesting to me how much the rest of the world is waiting for the U.S. to come out with some sort of fiscal support bill. how this affects Europe, it affects emerging markets. How much does the recovery in the developing world in particular hinge on the U.S. passing fiscal stimulus?
Well, I mean, if we have something like a $3 trillion fiscal stimulus, it will be large. It will impact other countries. But also what has happened over the last week or two in Washington with the World Bank IMF meetings, as you could see, was relatively, I would say, hugely different than what Tom Keene and I have experienced before with the IMF. We also have, in addition to the U.S. stimulus, the IMF head and the chief economist of the IMF saying that countries should start borrowing a lot more. That is the exact opposite of the austerity plans that you had for the last 20, 30 years by the IMF. So if you put that together with our stimulus, I think it could be a very interesting period of higher growth in the economies of across the globe. Plus, interest rates may in fact not go into a negative zone, and we might be going faster into a period of inflation with the kind of debt that is getting accumulated and will continue to get accumulated. So we might have different problems on our hands very soon.
Afsana, very quickly here, you are of Iran. Is President Biden's strategy with Iran the same as President Obama's?
You know, I think that that countries are evolving. I'm not sure if his policy is the same. I think his policy is to engage, just like he said last night, with the allies, so that the approach to Iran will be an approach that brings together all allies together. It's not just one country versus another country. And if you do bring Iran back into society, into the normal society and the normal economy, I think that region could be in a much better place than it is today.
Afsana Beschloss, always fantastic to catch up with you. Thanks for your time. Of Rock Creek Group and Bloomberg Wall Street Week contributor. Tom Keene, I'm not sure what the daylight is like between former President Obama and former Vice President Joe Biden, but I think it's fair to say there's a lot of daylight between the approach of Vice President Joe Biden and President Donald Trump.
Well, I heard that last night. I thought it was really interesting. I will say I wish there was a lot more depth on actual policy on China. And again, I go back to the Bloomberg headline, John, which I just think was great. There was just all that back and forth on, you know, you've done bad things, I've done bad things, I mean, I guess I just don't know if the electorate's truly engaged in that. I'm not sure.
I think a lot of the electorate's already decided. And that's the big change, isn't it? The undecideds this time around, Tom. I said this a number of months ago. Is anyone still left to decide?
No.
Who hasn't decided?
Lisa and I have decided we need more promotion of Mr. Kudlow's interview here.
Oh, please, yes.
Okay.
I mean, we're not undecided.
Absolutely.
John. Go ahead.
The Open is coming up in about 1 hour and 20 minutes' time. And on that show will be Larry Kudlow.
And Justin
Bob
Bieber.
Prince of Bridgewater. Mohammed Al-Arian. Hugh Hendry, Justin Bieber.
Position closed on euro at 118.51.
Anyone else you want to call in?
Gigi?
I'll do a call-in show. Gigi Hadid. Catch up with Gigi Hadid after the show. From London and New York. Honestly, you guys are going to get me into trouble. This is Bloomberg.
With the First Word News, I'm Rishika Gupta. The chances of Congress passing a stimulus package before the election are fading fast. House Speaker Nancy Pelosi and Treasury Secretary Steven Mnuchin continue to bicker over the details of the almost $2 trillion proposal. Meanwhile, resistance from Senate Republicans is building, and some House Democrats are reluctant to come back to Washington to vote if the Senate won't do so. For the first time, the FDA has given formal approval to a drug for fighting the coronavirus. Gilead's antiviral therapy, remdesivir, has already been prescribed under emergency use authorization. It was given to President Trump when he was diagnosed with the virus. L'Oreal reported a surprise increase in sales. The French company was helped by pent-up consumer demand for skin creams and cosmetics after months of lockdowns. We spoke with L'Oreal's CEO. 4 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
What is happening today in India is actually a determination to rebuild our economy.
India has an opportunity not only competing in the space of the factory of the world, but a very big opportunity to compete in being the office of the world.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Nancy Pelosi doesn't want to approve it. I do.
But you're the president.
I do, but I still have to get it.
The Republican leader in the United States Senate said he can't pass it. He will not be able to pass it. He does not have Republican votes.
Nancy Pelosi doesn't want to approve anything because she'd love to have some victories on a date called November 3rd.
This HEROES Act has been sitting there, and look at what's happening.
That was a flavour of the debate last night between Vice President Joe Biden and the President Donald Trump in Nashville, Tennessee. Also a flavour of the negotiations over the last 3 months and the inability to pass a fiscal stimulus bill down in Washington, D.C. You might have been told, we're close. We're getting closer. You've been told that many times. Here's the price action this Friday morning. Equity futures shaping up as follows. Just a little bit of a lift on the S&P 500. There we are, up about 1/3 of 1%. Yields inching just a little bit higher, 86 basis points, Tom, on a 10-year. And more broadly, through G10, weaker dollar, euro dollar, 118.50, up 1/3 of 1% there.
Yeah, euro dollar 118.50. That gets my note as well. This is the fact. Stanford gets the cred. They're out by Silicon Valley. Everybody talks about computer education at Stanford, at Berkeley, and the rest. Where Harvard has the definitive and original program. Vito Sperduto came out of the Harvard computer shop. He's at RBC Capital Markets, co-head of global M&A. Vito, I got to rip up the script here and go to the Google follies. The size, the mass that so many predicted for technology. I'll give a hat tip to Michael Mauboussin on that as well. Has tech in America gotten too big?
I don't think so. I think there's obviously the larger players, like in any space, are getting the headlines, but there's such a vibrant community below that in terms of the players that are developing new technologies. What's interesting, though, is if you look at some of the technologies that have just come to the forefront during this pandemic and how quickly those valuations have jumped. So it's becoming, as an overall sector, it's still a important driver.
Can you help us? And I know you go back to Fortran cards and the little punches and the chads in the card and all that. But Vito, can you help me with what we've heard from Eric Schmidt and others, that if there is fair choice, it's not monopoly? Do you buy that?
I think the statistics, certainly when you look at the size of the search market as an example, and you look at what Google represents, they've obviously got the better mousetrap. And I think they've driven a larger amount of volume through their search engine. And certainly it's built as an algorithm that the more that goes through it, the better it is. And so we've all become commonly used to it. You need to open it up and make sure that it's an even playing field in terms of competition. But it's an easy target, I would say, right now, especially for both sides of the aisle in a time like this as we're heading, we're 11 days from an election. It's an easy headline to make.
What's interesting is that the more attention goes on big tech, the less attention goes on big banks. And there's this idea that actually consolidation will be welcome among the financial sector. The rumor right now is that Wells Fargo is looking to sell its asset management arm, that perhaps some rumored buyers could be a Bank of America-like suitor. This follows the Morgan Stanley purchase of Eaton Vance. Is this an opportune time for banks to consolidate, to get bigger with the attention all on tech?
Well, I would say that we've looked very closely at what sectors we expect to be players in the M&A market as we're coming out of the pandemic. If you go back to the financial crisis, we saw a lot of the financial institutions who were probably a bit more distressed combine at that point. We're seeing Morgan Stanley obviously build up their wealth management business, as you mentioned, with the Eaton Vance transaction, and certainly others that maybe are struggling a little more trying to shape their portfolios. But I think the banks are in a much stronger position today than they were 12 years ago. And as a result, they're positioned to do some transactions. But I actually expect a lot of the volume from an M&A perspective to be more in, say, the tech and healthcare spaces. And then we've just seen this massive resurgence in energy, which we've been expecting for some time with the number of deals announced this past week.
Well, to Tom's point, though, on tech, and you're saying that there's going to be a lot of activity here, there is this growing concern about how big the biggest companies are getting. Are you preparing for or hearing about regulatory pressure going forward? Are people trying to get deals in now before a blue wave, or is that just basically all lip service and people are expecting things not to change too much?
I think what we've seen amongst our clients is that they're very comfortable with the forward outlook. They have plans regardless of which party obtains power. Certainly, there's been the threat of greater regulatory scrutiny, but the better companies are prepared for that. They know what their plans are going to be in the event that they get criticized with regard to their size. And at the same time, as they consider transactions, they know full well what the repercussions are going to be from the regulators and just from the market in general. So I do expect to see transactions amongst some of the larger players, but I really look at that as they're going to be acquiring some specific assets. Maybe they'll take the opportunity to divest some businesses where they can get greater value separated, but I think other sectors are going to probably be bigger players in sort of larger consolidations as well.
What's the urgency right now, Vito, on making ratios? I mean, I guess the capital ratios have been solved as a general rule, but you look at the book value disparities right now. Is there a strategic pressure into 2021 to say, let's go, we got to improve?
I think, look, the strategic pressure right now hasn't really changed. I think the better operators are still playing by the same playbook. They're trying to make sure that they're staying within the so-called ratios where they're comfortable. And if you look at whether it's the banks who are still playing by the same playbook, or if you look at, for example, a number of clients that we're involved with are trying to make sure that they're positioned to operate in a longer period of volatility as we look forward. And so they're very concerned about what amount of leverage do I have on my balance sheet going forward? Does it allow me to consider opportunities that come up? And does it allow me to execute against my strategic plans? One of the things this pandemic has done is that it's accelerated the progression of a number of trends. And so maybe you were looking at a specific acquisition before. You've got to move a bit quicker right now. Maybe you were going to develop a capacity internally. Now, maybe you need to acquire it because it helps you move quicker and survive in the longer term.
And it probably costs a little bit more too. Vito, great to catch up with you, sir. Thank you. Vito Spaduto of RBC Capital Markets. Tom, isn't that the story? The great acceleration, I think McKinsey called this. And it holds true. It rings true for a lot of people.
Davos, it's been so true. There used to be a 5-year plan, John, and then it was the 3-year plan. And I think with the pandemic, it's like, where are we in March? I mean,
do you remember
seriously.
anything from Davos this year? Seriously, do you remember anything from Davos this year?
The piano bar move.
I can't think of a
That's
more.
what I remember.
can't think of a more irrelevant Davos at the World Economic Forum. Just as COVID-19 was starting to take hold of those big
that's
Chinese
a fair
cities.
statement. It was clumsy.
On another planet that was playing
No,
out.
seriously, it was clumsy, and I think, John, you and I made the best of it, including an interview with Bob Prince that we had in January. Folks, you can redux that today. Robert Prince of Bridgewater on the open in the 9 o'clock hour.
After Harry Styles.
Is that another tease? Is that another tease? That's nice, isn't it?
Yeah.
Who's anchoring that show?
Harry Styles at
9 a.m.
9:36.
Eastern
I don't
Time.
know. Some guy. Gary's nice.
Alongside Tom Keane and Lisa Abramovich, I'm Jonathan Ferro. Kathy Jones coming up. She promised that
Yes.
she would play the piano.
All right.
She promised.
She couldn't fit into the 9.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
This has so entangled itself into our social fabric and into our social status pipelines and into the development of children that even if you opt out, that's not enough.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
bottom are having a very hard time.
We are having this income cliff at a time when actually the consumer is supposed to go out and spend.
The market is not as well prepared as it normally is for these kind of downside events.
This is a market that's thinking at some point stimulus is going to happen.
The Fed has a lot of upside to accelerate, but I think they're going to maintain this pace.
We need support for the economy, both for monetary and fiscal policy.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on Bloomberg Radio, Bloomberg Television Worldwide. Good morning, 99.1 FM in Washington. 11 days to go on the election. What are we trying to do? Well, we're trying to get through Friday. This is a serious time, a serious debate last night. This pandemic has worsened worldwide, challenges of a $3 trillion deficit and the rest of it. And John, the civility of last night was noted.
It was civil, it was muted, but Tom, stark differences on the outlook, particularly over COVID-19. The president promising a vaccine perhaps within weeks, and former Vice President Joe Biden talking up the failures of this administration and talking down the winter that's ahead of us.
Well, the winter that's ahead of us, and, you know, Lisa, we make jokes about it, but I thought the ending was pretty elegiac. Mr. Trump looking for success as being a measurement of how America moves forward. The vice president talking about winning hope over fear as well. And that really, Lisa, goes to one of the themes this week we haven't talked about, which is the partition of economic America.
Yeah, the idea that the jobless rate, yes, perhaps it's going down, but it's staying stagnant at one rate. And I will say one thing we didn't emphasize enough yesterday when we got those initial jobless claims, the number of permanently unemployed Americans, and frankly, those around the world, is increasing. And this idea that it's going to take a long time to remedy some of the scarring that's taking place right now.
Really important here on Bloomberg Television and radio. We've got 2 good hours coming up. The Open will be with us in the 9 o'clock hour. And, of course, Mr. Farrow getting an update from the White House and Mr. Kudlow. Right now, the festivities of last night. Here is Trump. Here is Biden.
You keep talking about all these things you're going to do and you're going to do this, but you were there just a short time ago and you guys did nothing.
We did.
You know, Joe, I ran because of you.
You know who I am. You know who he is. You know his character. You know my character. You know our reputations for honor and telling the truth.
Excuse me.
Please respond, and then we're going to have follow-up
questions. If this stuff is true about Russia, Ukraine, China, other countries, Iraq, if this is true, then he's a corrupt politician.
Right.
So don't give me the stuff about how you're this innocent baby. Joe, they're calling you a corrupt politician.
There are 50 former national intelligence folks who said that what he's accusing me of is a Russian plan. They have said that this has all the 5 former heads of the CIA, both parties, say what he's saying is a bunch of garbage.
And really quite interesting there last night. I'm going to go again back to Mario Parker and our team. Trump, Biden spar over graft, COVID, racism, but they keep the gloves on, and maybe that is a good summary as well. John, the backdrop to this is the uncertainty forward. Which uncertainty are you focused on?
The bond market. In the markets, Tom, if that's what you're speaking to, I just think the bond market is where it's at all through the week. The 10-year yield up through 80 basis points, the curve 2s, 10s out to 70, a level that we got close to in early June. And the highs of early June on a nominal 10-year yield was about 95 basis points. How self-limiting will that move be, given that this economy has just added stacks more debt to companies, not just in the United States, but around the world over the last 6 months?
Lisa, where's your uncertainty? You read the Fed bulletin at the Monkey Bar a few days ago. You're going to read the Beige Book this weekend. Lisa, what uncertainty are you focused on?
Well, I think that John really nailed it. The other uncertainty here is how much weakness the dollar can have. This has been the other driver this week, with it touching the weakest levels. If you look at BBDXY, the Bloomberg Dollar Spot Index, is actually the weakest in some ways since 2018. This also a major driver of yields rising.
Her job is uncertainty. Kathy Jones at Schwab Center for Financial Research joins us as well. Kathy, where is your uncertainty? Is it the same uncertainty that Liz Ann Saunders has?
Yeah, I think that we're focused very much on, the major issues here, such as the virus. When does it get under control? When can we finally start to get people back to work and get fully, up and running in terms of an economy? And it looks to us like it's going to be, quite a while still, even if we were to get a vaccine by the end of the year. And then we have to look at the Fed reaction function to an economy that continues to recover, but with a very high jobless rate.
Kathy, let's discuss that bond market. Does the 10-year yield have any business north of 1% anytime soon?
Yeah, we think 1% is probably the upper limit where it can go from here. I think at that point, the Fed might get somewhat concerned, and we might see some yield curve control or maybe a twist to put a cap on it, because as you mentioned earlier, we have just huge levels of debt, and we don't want to get into a debt trap. We can't grow because the debt levels are so high, particularly if the cost of financing that debt gets too high. So I think if you get much above 1% without a lot of really good economic news, you're probably start to see the credit spreads widen, financial conditions deteriorate, and that's when the Fed would probably step in.
Kathy Jones, 1%, the upper limit of a 10-year yield on a 10-year Treasury. What does that mean for your investments elsewhere?
It does not have Republican.
Well, we think it means that as opposed to this year when, we have huge returns because of price gain or rates dropping, as we go into next year, now you have to have some spread exposure, some credit exposure, because your gains in fixed income are going to come from the coupon, from the carry, rather than from price appreciation. So we've been suggesting, being down in duration, but taking some credit risk, taking it cautiously and carefully, but spreading out that risk pretty broadly so that you can have enough carry in order to have positive returns.
So yesterday at 4:30 p.m., I was looking at the Fed's balance sheet Eastern time, and it reached a new record high. And if you dig into the report, it includes ongoing purchases of corporate debt, albeit at a much slower pace. How much will the Fed continue to backstop the corporate credit market?
Well, I think they're in there for a good long time. I don't think they set this up as they set it up as a bridge to the other side of the crisis, and the crisis is proving to be much longer in duration than probably anticipated at the time. But I don't see them backing off until the economy is fully up and running. So I think the backstop will be there. They certainly have plenty of left. They haven't used, nearly more than just a fraction of the facilities that they've set up.
I look, Kathy, at where we are. It is, to John's point, it's about the bond market. Let me go back to a question from January of last year. Do you clip a coupon, or can you actually invest for total return in bonds?
I think you have to invest for total return. Coupon income is good, but you're not going to get a tremendous amount of that unless you go out on the edges of risk into high yield or emerging markets, which we don't mind having some exposure to those. We actually think emerging markets have some upside from here. But I do think you have to invest for total return. You really don't have a lot of options at these yield levels.
How much do foreign investors provide a backstop to U.S. assets at this point, given the fact that the dollar has weakened so much and will likely continue to do so if the prognosticators are correct?
Yeah, I think we haven't seen a let up in foreign investment at all. It ebbs and flows a little bit from month to month when we get the numbers, or week to week when we get the numbers. But I think foreign investors are still in. Yeah, nominal yields are down. But they're still higher than, say, Europe or Japan. Real yields are pretty much comparable to where they are in Europe. But I still think foreign investors, particularly as the dollar gets cheaper, will look at that as an opportunity to come into the U.S. market. We're just not seeing a big let up there.
Kathy, you know what time it is. It's time to turn around and do what you promised to do last time around, which is just a tune on that beautiful piano. Tom said he was going to bring in a guitar. I don't know if he did. Come on. We just want a little bit of a tune.
Okay. I promised I'd do this, but be kind. I'm not a professional musician, okay?
We'll be very kind. We'll be very kind.
There we go.
So you can hear the piano.
Yes.
Okay.
Do you know any One Direction?
Oh, God, Tom. Ignore him.
I've got to unplug these in order to
Okay, carry on. For everyone listening on radio right now.
Well, for our listeners on radio.
Kathy Jones with a
They're about to get a right treat, Lisa.
Piano in a very bright room, I should say. This should have some beautiful resonance. We'll see if we pick it up here.
Yeah, Tom is a connoisseur of resonances of pianos, going back to
Charles Schwab should put this in their promotional material.
All right.
Right, everyone be quiet. Let's listen in.
Very cool. Elements of Debussy.
Round of applause for Kathy Jones.
I would suggest Kathy Jones taking us out here. I would suggest it says San Francisco Symphony with the support of Mr. Schwab here at some point. I mean,
You saw me mess up on the piano.
No, it's beautiful. No, very nice. Real nice, scale resonances there. I can't do that.
It's a nice piano.
Kathy, thank you. Charles Schwab are going to be so proud. Thank you very much.
Thank you so much, Kathy.
Yeah, Liz Ann Saunders can't do that. Kathy, thank you.
Kathy, thank you. Charles Schwab Center for Financial Research, Kathy Jones. We spent a couple of moments ago really throwing the trash at the World Economic Forum in Davos, Switzerland. Tom, do you remember our little office in Davos, Switzerland? The reason why Lisa Abramovich just refused to come?
Yeah,
because the room was so small.
You guys created the pandemic in that room.
This goes to show how dated Davos, Switzerland is now. There is no way that anybody would put two individuals from the same company in a room that small ever again, Tom.
Well,
ever again.
Especially these two individuals.
In that little space that you see, and our team folks create this out of a concrete block, literally in 3 weeks' time with the TV set on the roof. John, the interviews I've done there, I'll give you just one. One day, Argentina blew up, and this is the luck of surveillance. We had Daniel Yergin and Ricardo Hausman back to back just because they were scheduled. That's a magic
Have you
little
forgotten
room,
already?
John.
Have you forgotten, Tom, that I was next to you when that happened?
I have forgot that. I thought Lisa was with me.
I'm looking at bonds.
I was next to you. Tom Keane, Lisa Abramovich, I'm Jonathan Ferro, and Kathy Jones is Kathy Jones. What a performance from London and New York. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. The chances of Congress passing a stimulus package before the election are fading fast. House Speaker Nancy Pelosi and Treasury Secretary Steven Mnuchin continue to bicker over the details of the almost $2 trillion proposal. Meanwhile, resistance from Senate Republicans is building, and some House Democrats are reluctant to come back to Washington to vote if the Senate won't do so. In Europe, governments have started to impose curfews more widely to stop a resurgence of the coronavirus. Daily virus cases are hitting records across the continent. France reported more than 40,000 new cases for the first time. And the UK has signed its first major trade deal since Brexit. The agreement with Japan largely preserves the terms under which the UK traded with Tokyo as part of the European Union. Meanwhile, there are signs of progress in trade talks between the UK and the EU. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Some things you see coming. Some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Been nobody tougher to Russia. Between the sanctions, nobody tougher than me on Russia.
I don't understand why this president is unwilling to take on Putin when he's actually paying bounties to kill American soldiers in Afghanistan, when he's engaged in activities that are trying to destabilize all of NATO.
Nashville, Tennessee, with the President of the United States, Donald Trump, and a former Vice President, Joe Biden, rounding out the debate series, which was boiled down to just 2 debates instead of 3, going into an election 11 days away from wrapping up. Here's the price action this Friday morning. Good morning to you all. Equities drifting higher through the session, up by around about 0.4%. Euro dollar 118.60. Our lineup of guests through the next 45 minutes, either reconfiguring their rooms or cancelling their appearances for the next several weeks, given what just happened to Kathy Jones, Tom.
Yeah, this was great. We thank Ms. Jones. Charles Schwab just emailing in. She slotted in with, I believe, David Zinman in an encore performance, San Francisco Orchestra here. We're looking for that in 2022. Right now, Jeannie Zaino can't play piano, but we're thrilled. She's with us, Bloomberg contributor in Iona College. Professor Jeannie, we've done a lot of tangential stuff today, like what they're going to do. I remember that day where George Herbert Walker Bush won in New Hampshire, and the excitement, the coattails as he wandered over to Vermont to do a follow-up campaign and experience. There was that electricity of we've got the momentum. Who's got the electricity this morning?
I think Biden still has it. I don't think Trump was able to do enough last night, the president, to change the trajectory of this race. I think he did a much better job, obviously, than he did in the first and the only debate. But I don't think it was enough given where the polls are at this point. And of course, I want to thank you for not asking me to play the piano. I'm incredibly intimidated to talk after Kathy doing that.
Well, it's okay. We'll get you with something as another instrument of your choice here in about 3 minutes. I look, Jeannie, at the now what? And to me, it is not an 11-day dash. There's to get to the Sunday talk shows, and then after that. What's the then after that, after this Sunday's talk shows here on Bloomberg Radio?
Well, what changes so much of this election, of course, is that this isn't an election day, it's an election season. We've already had about, I would estimate, we are thinking 40 million Americans have already voted. So, that narrows the opportunity for somebody behind, like the president is in these polls, to change this thing. That said, there could still be changes. We could still have an event or an occurrence that changes things. We've seen that. We saw that in 2016. But this is a referendum on Donald Trump's presidency. And we heard him last night trying to make the case that he is not a politician, but Joe Biden has been in for 47 years, vice president for 8 years, didn't do all the things he's promising. And while that may have been really effective in 2016, it's harder to make that case when you've been in for 4 years as president and people are judging you, and we're in the midst of a pandemic that people don't think you've handled quite well. So the window and the opportunity for the president is narrowing, but this thing is not over. We've also seen the polls in these battleground states tightening enough within the margin of error that if he could bring over the few of the remaining undecideds, he could squeak out a victory. I think the place to watch is Florida. If he can't win Florida, this thing is over, and it will be over early on Election Day if he can't win Florida.
So, Jeannie, at some point in the next 11 days, John Farrow is going to say the polls indicate still that Joe Biden will emerge the victor. And we have, of course, Tom Keene, who will say, can we trust the polls? If polls don't get it right this time, if we see a redux of 2016, is the entire political polling industry dead?
I don't think so. You know, I think we all need to be cautious that these polls are all within a margin of error. So while they didn't predict the outcome of 2016, the national polls were pretty good. Some of the state polls could have been a bit better, but it's awfully tough when you're talking about elections. Let's not forget, in 2016, Donald Trump won 3 states, Michigan, Wisconsin, and Pennsylvania, by less than 1%. That's really tough for anybody to poll. So, you know, as a pollster, I have to defend the industry. Could we do better? Absolutely, and always. But I think we also have to educate voters and people when we talk about polls that these are probabilities. They're within a margin. So when we say, you know, 95% confidence, of course, that means 5 out of 100 times this thing is not going to happen. And that's a possibility in 2020, just like it was in 2016. But they still do give us an indication as to where the picture of the American public is at a given moment, not something that you can predict an actual outcome from.
Well, let's talk about how clear that picture might be right now, Jeannie. Of course, the big difference between now and 4 years ago, the lead that Hillary Clinton had on Election Day was about 3 points, just north of that, and the final outcome was 2 points in her favor in the popular vote. As we look at things right now, an 8, 9, 10-point lead, almost double figures on some of the real clear average polls that I've seen over the last few weeks, Jeannie. Why do you think that is an accurate read, an accurate reflection of the mood of this country at the moment?
I think that's a little bit high myself. I am not convinced that Joe Biden or the Democrats take this by 8 or 9 points. I do think nationally he is going to take this probably closer to 4 points, if you will. That's my guess, my estimate. But I think we are where we are primarily because this is a referendum on the president. And we are in the midst of unprecedented times in the context of a pandemic, and he doesn't get high marks for his handling of that. If we had been talking in January, I think the president would be ahead, and I think he would probably take this thing. Most incumbents do in good economic times, and they were good at that point. But the pandemic has really changed everything in the United States and around the world, and I think that's where Joe Biden finds himself ahead. But I do think there are challenges here for the Democrats and for Biden, and I think the president should have talked more about this last night. Many Americans are not comfortable with the idea of Democrats holding all of Washington, D.C. in a matter of months and what that will mean from a policy perspective. And so if the president and the Republicans in the closing day can make the case that the spending, the policy changes, the regulation that will go in place if Democrats hold the Congress and the White House is not something that Americans want, I think that's an argument that could sway still some undecided and voters on the fence.
Jeannie, thank you. Always appreciate your insight, your contribution. A Bloomberg contributor, Jeannie Zaino, thank you very much. Tom Keene, 11 days to go until we wrap up this thing. The polls are the polls, the numbers are the numbers. I read them out, you shrug your shoulders, and we go round and round in circles for the next 11 days, I guess.
We will get more polls. I don't consider it 11 straight days, John. I think there's going to be some real ebb and flow in here. And I get the idea a lot of people are voting early, and that's all new to everyone as well. I just really want to believe there'll be that exhaustive push to Tuesday, and that's how the president did it last time.
Well, it's amazing that just a month or so ago, the huge uncertainty, the huge risk factor for this market was that Wednesday morning, Tom, we'd wake up and we wouldn't have a result. Is that still the huge concern? On Wall Street, I would say that concern is out there, but nowhere near where it was a month or so ago.
No, I think it's almost evaporated, and maybe that's wrong. You know, we'll see. It'll keep us employed. It'll keep David Weston busy.
It will keep David Weston busy. It'll keep all of us busy. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Your equity market pushing higher, up 11. We advanced 1/3 of 1%. NASDAQ futures up 1/3 of 1%. We advanced 36 points there. Up next on this program, Lalitop Cholu of JOHCM on this credit market. This is Bloomberg.
Me gustaría decirle a los empleadores que fueran más humanitarios con sus trabajadores, que les hagan valer sus derechos. Y estábamos viviendo en dos casas, en unas 50 personas y en la otra otras 50. En cada casa había 5 habitaciones. En cada habitación había de 3 a 4 camas abarrotadas. Vivíamos de 6 a 7 personas. Un baño para cada habitación y una cocina para todas. Una vez que nos atendieron en el hospital, al salir nos avisó una compañera que ya nos habían reportado a migración. Gracias a Dios ahorita de salud yo estoy muy bien, pero en lo moral no estoy muy bien, porque a causa de esta enfermedad yo perdí todo, perdí mi trabajo. Yo creo que mi caso resulta un gran problema de cómo las personas migrantes estamos en riesgo de explotación por parte de los empleadores.
From London and New York, this is Bloomberg Surveillance. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Here's the Friday morning price action, 60 minutes away from the opening bell, with equity futures drifting higher by around about 1/3 of 1% on the S&P 500. We advance. A headline coming out of Europe.
Big headline.
I didn't think I'd be doing this 4.5 years after the vote.
You can do it.
But here we are. France, according to Reuters, is said to be telling the fishing industry that they might get a smaller catch in the United Kingdom.
So to speak.
Yeah.
John, well, this is serious.
Let me just get to sterling. Let me just get to sterling.
Oh, okay.
Table positive by 0.2%. We have a 131 handle on the pound. Off the headline.
Yeah.
About maybe some kind of agreement on fishing, Tom.
Yeah, it's a serious issue. We spoke with one of the key ministers of Ireland, the Republic of Ireland today, and we really ran through this. And John, I mean, it's an intractable issue for a lot of the coastal parts of the United Kingdom, out over the Channel, out over the North Sea, and it also goes with the depletion of the fisheries. John, as you know, the cod depletion from the 1970s, from 3 million units down to 1 million units, has been substantial. These are deadly serious billion-dollar negotiations.
We have talked about this, Tom. If you go for fish and chips in the UK now, you used to get cod. You probably don't anymore at your local fish and chip shop. As Tom points out, the constituencies around the coastal areas, also the constituencies that voted Brexit, they wanted control back. So this is a huge negotiation point that perhaps, I stress perhaps, according to the reporting, that maybe the French are giving back something a little bit here, Tom, to strike a deal. So cable positive to 130, 113, up about 0.25%. That's the UK story. Let's get to the American story, shall we? In the United States, Nashville, Tennessee, there was a debate yesterday evening. Here's the President of the United States and the former Vice President, Joe Biden, on North Korea.
He's legitimized North Korea. He's talked about his good buddy, who's a thug, and he talks about how we're better off.
They tried to meet with him. He wouldn't do it. He didn't like Obama. Having a good relationship
Trump,
with leaders of other countries is a good thing.
We have a lot of questions to get to.
That's like saying we had a good relationship with Hitler before he, in fact, invaded Europe.
Former Vice President Joe Biden there, and the President of the United States, Tom.
I am really glad we showed that, John. I was frankly stunned at that comment, and I'm not sure how it rang other than for so much of America that is ancient history. And I really, John, really, you know, the way the Vice President pitched that, I'm surprised that didn't get more play last night.
Foreign policy, that was what the debate was meant to be on, Tom. But we just had those little moments like that one right there. Joining us now on this market, Lale Tokcholu, JOHCM Senior Fund Manager. Lale, fantastic to catch up with you, as always. This credit market, spreads are tight, Treasury yields are low, they've been higher this week. Fixed income, it's been a huge trade through 2020. Do you think it's going to break anytime soon?
Good morning, all. Well, it's hard to tell whether it breaks or not, but you can't. I mean, this is a mistake I think many people do. They're very short-term oriented. And if you think of running portfolios, they're like tankers. You can't just shift them overnight. So will the market break? You know, I think the market is getting expensive. And I do think if you dissect the credit markets, its fortunes are closely tied to whether economic growth happens and what kind of a stimulus package passes. So I think that's a possibility, yes.
Lale, what's so important to me, and it's great to have you on with a mathy conversation, is in Japan we are witnessing almost a lassitude where the dynamics have been sucked out of the fixed income market for various reasons. Is that going to be the surprise a year and 2 years forward, that we migrate from bond and fixed income dynamics to a much more static market?
It's possible, but look, there are differences between the Japanese markets and the U.S. markets. The investor base is different, the indices are different, so there are absolutely notable differences. The key point is they've been fighting with low rates for an extended period of time and very little to no inflation. Can that happen here? Sure. I mean, I think Kathy Jones hit the right point, which is, you know, we're talking about rising 10-year rates and blah, blah, blah. Look, people were talking about a 4% 10-year not that long ago, right?
Yeah.
We're now thinking like maybe 1% max.
Yeah.
I think it is entirely possible it's lower for longer. It is entirely possible.
And what's amazing, Lisa, is Kathy Jones' stretch in E-flat there was extraordinary.
Thank you, Tom. That definitely was extraordinary, which brings me to credit spreads. Lale, one reason why I always love having you on is because you're very realistic about the fundamental picture and struggle with pairing it with the unlimited or seemingly liquidity from central banks. How do you retain that bearish view in light of the fact that the Fed is backstopping this market and don't fight the Fed is the predominant feeling across the street?
So it's actually interesting. I'll tell you how we're constructing and how we're thinking about it. But this don't fight the Fed, I think it's very interesting because I think one of the possible mistakes the market is making for the future is now I think everybody now bakes in that the corporate bond purchasing is now in the toolkit, as you know, as Jay Powell talks about. But there may be a nuance in this crisis versus the global financial crisis, which is this was a global pandemic and it hit everybody at the same time. There was no bad actor. So I will warn the market that in the future, when we have another crisis, which we will, cycles still happen regardless of what other people say, it is entirely possible that corporate bonds may not be in the tools. I just want to make sure I plant that seed in people's mind. The second piece is how do we construct the portfolios? Look, I think investment grade has gone really expensive, long duration. Investment grade, I think what you need to do is pick the companies that are actually on a path to deleverage. There are not a whole lot of them. And take duration risk on those. It's about credit picking. High yield, we're still playing the liquidity, which is the refinancing theme. So buy the bonds that are callable in good quality companies. Rest of the high yield is challenging. And just because you guys talked about math and you knew I was going to talk about statistics, let me walk you through one thing. High yield average index spread in the U.S. is 490 today, okay? Let's just assume to beat that index, you have to bat for companies that are in the 500 to 800 basis points in spread range. That's only 20% of the U.S. high yield index. And out of that 20%, nearly half is energy, leisure, capital goods that are at the epicenter of coronavirus-related slowdown and stimulus payments. This is why you can't disentangle high-yield fundamentals from the economic recovery.
So, Lale, let's start with investment grade, and then we'll go to high yield, because you said a couple of things there. The companies within investment grade on the path towards deleveraging, you said there weren't many. Where'd you find them?
They're not that many, but there are a few companies that have basically learned their lesson, and they're going to deleverage. I mean, they are basically selling assets, and they're making sure they're working down their leverage. And these are the ones that were basically what people were talking about, that they were, 3, 4, 4.5 times levered pre-coronavirus crisis, where the market was a little bit criticizing, okay, it's time to deleverage now because the good times may not last. I think those companies are really working towards working down that leverage. Now, there is a point that I think there is a narrative in the market, which I don't agree with, which is this golden age of bond investor, because now that people have put on this debt, they're going to deleverage. Let me point this out. Large companies are not borrowing from banks. They're going to the bond market. The biggest difference between bank and the bond market is bank debt is payable at par with no penalty. You can't do that with the bond market. So whether you're IG or high yield, what the companies are banking on, future EBITDA growth or asset sales to deleverage. Again, that is highly, highly dependent on the economic growth.
Lale, are preferreds a legitimate yield equivalent, or do they have too much of an equity component?
I think preferreds, if you find, there are some fixed for life preferreds that are very high coupon. And, I think as the companies, through the pandemic, none of these things are going to get cold. So at least until you get a better picture of the outlook, they are decent places to be. Yes.
Lale, is there any trade to be had in the 11 days left before the U.S. election?
No, I mean, these things are very hard, but the market is similar to the equity market. There is a, general trade that's happening, which is stimulus induced, right? Whichever party wins, it's likely we're going to have a stimulus. The question is how big it's going to be. And you can see it, the companies that may get the benefit from the stimulus, you can see the stocks, and also on the bond market, a little bit of a movement. But nothing that we're specifically recommending.
It's not the golden age of credit. I've got to ask, was that a little bit of shade at PGIM and Greg Peters in the last couple of weeks?
Are you trying to get her in trouble?
Hold on a second, hold on. No, I'm not actually calling anybody out. I have heard that narrative. I'm not sure they're one of them.
All right.
John.
I'm just wondering if I should tee them up for a conversation in the 9 o'clock in the next couple of weeks. That's all. Lale, thank you, as always.
Seriously. Trying to start some
Lale
trouble.
Charlie there of JOHCM. No, I'm just saying, I just had the conversation with Greg Peters of PGIM, I think last week, who called it the golden age of credit, and Lale was taking the other side.
No, it's true.
John, what are you doing on the real yield today?
I'm going to walk you through the 9 o'clock first, Tom, just quickly, because we haven't got there yet. So coming up in about 20 minutes' time, we'll catch up with Larry Kudlow, the National Economic Council Director. Shortly after that, we'll talk to Bridgewater's Bob Prince, the co-CIO. I'll drag this out as long as I can. Then shortly after that, we'll have a conversation with Mohamed Al-Arian, now Queen's College president. Looking forward to that. Yeah. And the Jets, of course. Yeah. Are we skewed towards the Jets this week, Lisa, or the Giants? Which one is it?
I'm skewed toward the Giants this week as well.
Skewed towards the Giants this week. Okay, then after that, Hugh Hendry. So some really deep thinkers coming up in about 19 minutes. At the open time, so that'll be fun.
You know, unlike what we have shallow thinkers or something.
We have music.
Like that. We have piano.
You've got people that play the piano.
Okay.
You know, the amazing thing about this job
what
sometimes,
Tom? What do you got on the real yield today?
A secret.
You got the Chancellor of the Exchequer on?
I'm going to tease that at the 9.
Okay.
Gigi Hadid on high yield.
And vodka spaghetti. That's a talk at home.
It's going to be a good one. Coming up next on this program, I won't be here for it. Pat Foy will, MTA chairman.
This is an important conversation. Yeah, serious conversation.
I'm not playing it down. You will lead that conversation. Keep saying it. Eyes of the world.
Stay around.
On Capitol Hill in Washington, D.C. You've had your break, Tom.
Be sure you get there at 9:00.
You had your 5-minute break, didn't you? Your little snooze.
Yeah, my snooze.
Should be ready to go.
Like 4 minutes.
Good.
You know.
I'm going to get my nap in.
Okay.
Take a little rest. Come back for more. Futures up 12. We advance 1/3 of 1%. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. It was one of the last potential turning points of the 2020 election. President Trump and Joe Biden squared off for 90 minutes in their second debate last night. They battled over the coronavirus, the economy, and the stimulus package that's now stalled in Congress.
Nancy Pelosi doesn't want to approve it. I do.
But you're the president.
I do, but I still have to get it.
The Republican leader in the United States Senate said he can't pass it. He will not be able to pass it. He does not have Republican votes.
Nancy Pelosi doesn't want to approve anything because she'd love to have some victories on a date called November 3rd.
This HEROES Act has been sitting there, and look at what's happening.
Unlike their first debate, the candidates largely complied with rules of the debate that called for them to allow each other time to speak. And for the first time, the FDA has given formal approval to a drug for fighting the coronavirus. Gilead's antiviral therapy, remdesivir, had already been prescribed under emergency use authorization. It was given to President Trump when he was diagnosed with the virus. And Chicago is hoping a business curfew will help stop the rapid rise in coronavirus cases and hospitalizations. It starts today and it will last at least 2 weeks. A curfew will be in place from 10 p.m. to 6 a.m. for all non-essential businesses. Bars without a license to sell food will no longer be able to serve customers indoors. Over the last week, the number of cases in Chicago have risen 54%. And Bloomberg has learned that U.S. regulators are close to a final decision on whether to bring an antitrust suit against Facebook. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
When opportunity knocks at the door, don't say, blimey, I've still got my pajamas on. Say yes to stuff and it will take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with LACWA.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
To live with it. We have no choice. We can't lock ourselves up in a basement like Joe does.
He says that we're learning to live with it. People are learning to die with it.
You also said a vaccine will be coming within weeks.
Yes.
Is that a guarantee?
No, it's not a guarantee, but it will be by the end of the year.
Anyone who's responsible for not taking control, in fact, not saying I take no responsibility initially. Anyone who's responsible for that many deaths should not remain as President of the United States of America.
The two nominees last night talking of the pandemic, what we've tried to do on a Friday, this is really, really important, is try to understand that yes, we do economics, finance, investment, yes, we do politics, and we do it with fancy ties and suits and dresses as we talk to the Bloomberg elite of the world. And we forget not that there's a whole bunch of other people out there. Helping us with that has been Patrick Foy. Pat Foy is with a small shop called the Metropolitan Transit Authority, where he is chairman and CEO. And Pat, I want to go right down to the basics. The last time you were on, we talked about a bus driver moving people around Northern Central Park. How about Radigan, Hendy, Hartley, Woods, and Augustine doing what you guys do every day, which is jumping on tracks of moving railroads?
Yeah, those five Long Island Railroad employees on Wednesday at the Long Island Railroad East New York station saved a man's life. MTA people do that regularly. They were the right five men on the spot. They called the train dispatchers, stopped the trains. They were flaggers, so they knew what to do. Jumped down and brought the man up to safety. It could have been a terrible situation had they not been there. Had they not been used their training and their bravery and courage saved a man's life. Incredible public service.
You are distracted by getting billions in aid from this natural disaster, along with other cities nationwide. What is your message to the elites of Washington this morning on your need to get a check in the mail?
Well, Tom, there are three reasons the MTA needs $12 billion. One is jobs, jobs, jobs. The second is social equity, and the third is environment. I described last time I was on the drastic cuts we may be forced to make in service, up to 40% reduction on subways and buses, up to 50% on Long Island Railroad and Metro North. and laying off 8,000 to 9,000 colleagues. Our preliminary estimates, if our hand were forced and we had to do that, would be a reduction in economic activity in the New York region of about $100 billion and a reduction of about 350,000 jobs, including 300,000 jobs in New York. From a social equity point of view, right now we're carrying on subway and buses about 3 million customers a day. That's up substantially from the depths of the pandemic. But those are workers who can't work remotely, who can't telecommute, and they're essential workers. And just as MTA workers at subways, buses, Long Island Railroad, and Metro North were heroes carrying heroes during the depths of the pandemic, they continue to do that. The people we're carrying don't have the option of a car. They don't have an option of working from home, and it's a matter of social equity. And lastly, there's a limit. We're now carrying about 90% of pre-pandemic passenger car and truck volumes on our bridges and tunnels, 90%. There's a limit to how many cars and trucks can come into the city of New York and come into Manhattan. We're near reaching that limit. So from the point of view of jobs, social equity, and the environment, we need this funding as a first order priority.
Okay, so what's your absolute deadline when it comes to making these cuts? What's your deadline for getting this funding?
So Lisa, like any organization, we're on a calendar year. We will present a plan and a budget to our board in November. The board will vote on it in December. It's got to be adopted in December. And obviously, bond investors and credit rating agencies and folks like yourselves are going to be looking at that process. So we really need funding and certainty about funding early to mid-December at the absolute latest. If a bill doesn't, we've been obviously watching the sausage making going on in Washington, and we really urge the Senate Republican leadership to support funding for mass transit, as well as the state of New York and the city of New York. If we don't get that, the MTA may be forced, our hand may be forced to make drastic draconian service cuts and to lay off thousands of people. The economic, social equity, and environmental consequences of that will be dramatic.
I have to say, Pat, as a lifelong New Yorker, born and raised, yes, ridership has increased from the depths of the pandemic, but is far below anything it has been in recent memory. Given the fact that the MTA, the subway system, et cetera, is the lifeblood of New York City, is New York City dying?
No, New York City's not dying. New York City is experiencing a tough time. New York was the epicenter of the pandemic, frankly, in the United States and the world. Thanks to Governor Cuomo's leadership, that we've broken the curve. We've broken the curve, right? The curve's been broken. Infection rates are low. Other parts of the country are experiencing spikes. New York City's going through a tough time. New York City's gone through tough times before the 1918-19 pandemic, 9/11, Superstorm Sandy. I've lived here all my life in New York. The city will survive. Other cities, New York, London, Milan, Bombay, have gone through pandemics in the past. New York will get through this. But to get through it, the MTA has got to be funded. It is the circulatory system of the New York City regional economy.
Pat Foy, thank you so much. With the Metropolitan Transit Authority, their chairman and their CEO. Lisa, this is just so important. As you mentioned, it's still down, but it is, at least I know to our listeners and viewers worldwide, the separation here of not the haves and the have-nots, but all of us from truly essential workers is just stark right now.
Well, Pat Foy touched on something that was very important, and it's very important going into the Larry Kudlow conversation coming up here on Bloomberg Television. This idea of stimulus, and when we get it, it matters. And the fundamental issue that has been the sticking point is the amount of financing to states and local governments. Yeah. And the question I have is, how long can some of these governments wait before they have to implement some of these austerity measures, cuts that will further accelerate some of the decline in the labor markets? This is a debate. It's an ongoing debate. How long can they hold out? And Pat Foy was saying mid-December.
Even more tragic, Lisa, is once they start announcing the thousands and thousands and thousands of layoffs, coast to coast, including, I would suggest, a mix of politics, they will switch on a dime. So why do we need to get there? Why can't we just fix it now? And again, there's a small matter of an election in the way. What are you going to read this weekend, Lisa, besides the Fed Bulletin?
Emily in Paris, what was it? I guess that wasn't a book. I guess that was a movie.
No, you can watch it all in. It's killer.
I'm going to read the reports. I want to understand the move behind the bond yields, frankly, Tom. I think that is a really interesting note here, given the fact that the Fed is still buying bonds, given the fact that we still are expecting muted growth, given the fact that there is still uncertainty around this election, Tom.
Yeah, I go back to your muted growth. I think the huge mystery undersaid with all the other distractions is just simply where's aggregate demand. Lau Brainerd touched on this in her important comments earlier this week, but simply where is the economy? And we'll dive into that in a very exciting next week. And of course, the following week, that first Tuesday of November, with our special coverage. I'm not sure if Cirilli comes home from Nashville. Maybe they just plant him there for the next 11 days. Coming up in the open, John Farrell will speak to our National Economic Council Director, Mr. Kudlow. Good morning on Bloomberg Radio, on Bloomberg Television.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
This has so entangled itself into our social fabric and into our social status pipelines and into the development of children that even if you opt out, that's not enough.
Even in a pandemic, big companies have maintained easy access to financing, but small businesses and consumers are finding it much harder.
There's certainly a large part of the economy that's not being seen by the banking system.
I'm Shonali Bassick. Join me for a Bloomberg special report, The Credit Disconnect, this weekend on Bloomberg Television.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see